You are live. Still shows nobody's watching. Did you guys hit the link, or you? Let me try to refresh and see. Yeah, it still shows nobody's watching. What the hell? Whoa. All right, almost had a wicked loop there. Yeah, if you also, just so you guys know, people who are new, if you're in the live stream and you're in the voice channel, you have to mute YouTube so we can talk and have a discussion on the voice channel, but that doesn't create a feedback loop on because of YouTube. Because if the audio is coming out of your computer back into your phone, it'll create a never-ending loop. So we got 5 people. Just give it a couple minutes. I want to get started quickly. I don't want to have to wait 20 minutes for people to join. So if anybody misses out, that's on them. I'm just going to give everybody a quick 3-minute warning. Doge. Doge got wrecked. Although, it probably will moon. I wouldn't be surprised if it goes on like a super run once it actually bottoms out. Because it's a joke, obviously, in every way. And it's always funny when it gets listed on some exchange and all of a sudden this joke of a coin that was meant to be a critique, it was created in jest to make fun of how people will buy anything. It's just crazy. I still can't believe that happened. And I can't believe it stayed. Like, it's actually a usable coin that people trade. And it's crazy to me. All right, let's look at what you guys suggested we talk about for the stream. Vader University student discussion. So, long-term outlook. Short, medium, and long-term outlook. Short term could go up. Most likely going to correct a little further. Midterm, really bullish. 38,000 over the next 6 months, just certainly within the realm of possibility. I would argue it might even be considered a highly probable outcome once we do start moving up. I'll probably say with some relative certainty that I do see breaking 30K. Pretty sure that's going to happen in the next 6 months. And then long term, super fucking bullish. So there you go. Short term, bullish, but we probably go down a little more first. Midterm, really fucking bullish. Long term, really cocksucking motherfucking bullish. Fib tool, we can go over some stuff like that. I wanted to do more on strategy, but I'll get back to you on that in a second. Hold on. Choosing a good hooker. That's something we should certainly go over. I have some interesting thoughts on the U.S. government side of things. I'll get back to you on that. We'll come back around to that. One, two. He showed me a 5-wave chart on one. So let me just look. 1, 2, 3. Yeah, that won't. That's not gonna work. 1, 2. All right, I got enough to work with. Billing website overheads. All right. So based on what other people had asked me to go over, and then some of the things I wanted to talk about anyway, I have some really good ideas on stuff we can cover. So let's do that. I'm going to tell you what they are really quick, but let me make a couple notes. So we have XRP University. So one of the things I wanted to talk about when I talk about trades, as a matter of fact, let me see here. So there's only 9 people in here. A lot of people are going to have to rewatch this back later. We are at 6 minutes and 50 seconds in. So let me just make a note here, starting at 7 minutes. That way I can edit this down later and repost it. Start at 7 minutes. All right. So when I talk about what's a low risk versus a high risk trade, when you look at short term plays in Discord, a lot of the time I'll say, hey, here's a great trade idea. This is considered medium, high risk, low risk. There's a couple different variables that come into play. So we'll break down those. Essentially, I consider the amount of capital risked and the probability of success. I'm not going to get into how to determine probability of success because I have a pretty convoluted function that I use to come up with that, where I look at more recent highs and lows, the differences between those highs and lows, the different intervals. So I'll say in the last 24 hours, the high versus the low has a spread of X, and that occurred over Y minutes. And then I compare the size of the spread relative to the overall price. And then I compare that to volume. Then I do the same thing for a daily and a 4-hour chart. So looking at all the different charts, I can see whether or not the current trend is an anomaly or typical. So if you're looking at XRP, for instance, if XRP commonly has high-low spreads in a given day that constitute 4% of the 5% of the total coin's value, essentially meaning if you have a spread that's 10%, not 5. If you have a spread that's 10% where XRP goes from 5% up to 5% down. So it goes like, say it's at $1 and it goes from $1.05 to 95 cents. That would be essentially a 10% spread, because that's a 10-cent spread based on $1 asset that's valued at $1. So the spread of the high and the low in that day on the hourly or whatever is 10% of the total value of the coin. Now, if you then look at a 4-hour and then you look at daily, or if you look at the 15-minute, I usually use 3 different time frames, depending on what the trade is I'm looking at. If I'm looking at a shorter term trade, I'll do 15-minute candles, 60-minute candles, and then 4-hour candles. And then I look at all 3 and I compare those. And then what I can see is whether or not, if I compare that to the daily over the last 6 months, the daily average over the last 6 months, I can see whether or not it's common to have a 10% spread, high-low spread, or whether that's pretty rare. And if that's pretty rare, that means there's increased volatility right now on this coin, and it's something I might not want to get into. Unless it's overwhelmingly bullish, then it'll sway me to make a different decision. But if I'm not particularly bullish, if I don't have extremely high confidence in that trade, I'll usually avoid it because it's just too volatile. So I have different tools like that, different functions and equations I've come up with to generate some sort of quantifiable um, probability for how my trades may or may not succeed. So I factor all that stuff in. And then there's the capital risked by the trade itself by percentage. So if I find that a trade based on my function has like a 65% probability of success and the capital being risked is only 2.25%, that's going to be a low risk trade. It's a high probability of success and I'm only risking a small amount of money. On the other hand, sometimes I'll have a situation where I really can't get into this trade because there's no good entry. And if I buy in, I'm going to have to set my stop loss like 5% below my entry. That's a really, really big stop loss for me. I never set my stop loss that far down. But if that particular coin is swaying back and forth 5% constantly, it's probably a good idea to have the stop loss a little bit lower just to protect myself so I don't get stopped out before a big run up, right? So in those scenarios, I would have considered an extremely high risk trade if the trade has me risking 5%. But on the other hand, if it looks extremely bullish and the overall market is in the process of a really, really strong bullish trend, then I'd be more likely to enter that trade and I would consider it a viable trade, even though it appears at first to be overwhelmingly risky. I might enter it and just consider it a higher risk trade. So those variables always come into play when I'm offering up my opinion as far as the risk level of the trade. So we can go over some more examples of that. Um, but that was one thing I wanted to clarify. I know some people had some questions about that whenever I say, hey, somebody will say like, I didn't get into any trades yesterday, and it looks like, you know, every trade you got into did really well, and I didn't enter any of them because you said they were all high risk. That doesn't necessarily mean you shouldn't be getting into them. It depends on your personal risk tolerance. So let me add that. So I'm just going to summarize the stuff we just went over. So I'm going to organize these videos a little better when I do the live streams. All right, so in summary, when I do in short-term plays or even in long-term plays where I'm sharing the different trades I'm getting into, I'll say this particular trade is high risk, this particular trade is low risk, this is medium high risk, medium risk. So I wanted everybody to understand what that means. Sometimes a higher risk trade has a really high probability of success, but I still have to risk 5% initially because of how volatile the price action is on that given day. On the other hand, I might say this is a low risk trade because it looks like the probability of success might only be 25 to 35%, so it's pretty low. I don't have the highest amount of confidence in the trade itself, but I see a perfect entry. And I can tell you that in the last 72 hours, the EMAs and the other Ichima dynamic supports at the top and the bottom of the cloud have been holding perfectly, and the support is extremely strong. So based on this current entry, I can buy in, and I only have to risk 0.75%, less than 1%, because everything is so tight and we haven't seen any wicks that would stop me out prematurely. So in that scenario, I could say this is a low risk trade because I'm risking such a tiny amount of capital. That's on $1,000 trade, I would be risking $7.50. So that's obviously something that any of you guys can handle. It's pretty much a risk-free trade if you're risking that insignificant amount of capital, right? So I would say this is a low-risk trade, even though I don't have the highest level of confidence probability-wise as far as its probability of success. So hopefully that clarifies what I mean when I'm talking about those different risk levels. It's a combination of multiple variables that give me just a general high, medium, medium high, medium low, or low risk. Now, something else to consider. Let me note this too. Now, when it comes to high versus low risk, in some instances, hold on. Sorry, I think I got somebody I have to add who wanted to be here. Sorry, give me a second. In the meantime, just anybody have any questions on the stuff that I just briefly went over? The risk and those topics. Any of you guys have any questions on that stuff? Yo.
Yes, you think the bleeding in BTC is about over?
That has nothing to do with this topics I just discussed. We can go over that, yeah, but I just want to know if anybody has any questions on everything I went over so far. The managing how I classify my risk levels. I'm going to get into this a little bit deeper, but anybody have any questions on that stuff? When I say this trade is a high risk trade or a low risk trade, everybody understands exactly what I meant and how I explained it. Oh, okay. You guys are really talkative, huh? So during this live stream, chat in Vader University student discussion, VU student discussion. That's the channel I tagged when I said the live stream link is over here and whatever. And I said put your desired topics that you might want to go over in student discussion. That's the link. It's under Vader University, all the way in the bottom of the channels. That's where we chat during the live stream for Vader University live streams. So if you guys are too shy and you don't want to talk on the voice channel, you can type up questions. If you are in the voice channel now, but you have no intention of actually using your microphone, you could just leave and just watch the YouTube live stream because you can get the audio that way. I hope you guys stay in the voice channel because I really like when you guys interact with me and ask me questions and pick my brain. And if I'm wrong about something, you can jump down my throat and say, hey, Jesse, I think you missed this, or I don't think you're right about this. Because that's helpful to everybody. So hopefully you guys have some questions and you could ask me on the voice channel. I always prefer to do it that way. But if you guys are shy, it is what it is. If you guys are pussies, that's totally fine. I'm just kidding. Okay, let me just get this guy in here, and then we'll finish going over the risk stuff. Yeah, Winnie, football's European football. I mean, is actually big in the U.S. too. There are a lot of fans of. It's not as big as our football here, but still there are a lot of soccer fans in the U.S. I'm a soccer fan. I don't really watch on TV unless it's like the World Cup or something. But so yeah, we should probably check out that Chills. See fan tokens. Might be worth looking into. I mean, that's why I was so into BTT, and I was talking about how large of a customer base they have. I'm going to get into that too for people who didn't read everything I said in the premium section under Vader University Dark Side Only posts. Or sorry, not Vader University. Vader's posts Dark Side Only under the premium section. I talked about my thoughts on BNB, BTT, and TRX. Go check that out, and we'll talk about that as well. Now again, let me just get this new member in here. There he is. Okay, so that's updated, and now the new guy.
there's an old gap on the CME futures.
The 8,500 gap.
Yeah, it does look like they're gonna fill it up.
Yeah, that's what we've been talking about. Chart Vamp and I. Vamp, are you still here? I think he left because he was at the dentist. All right, I gotta DM him and see where he's at. I want to get his thoughts on that. I gotta ask him what he thinks about the Gap Mafia. I think we're just gonna go close the 8,500 gap, and then we can run right back up. That's why I said after the 10K support failed, 8,500 is gonna be the next. Hey, this is oh, that's why. This is going to be a huge run, but we're never going below 8,500. I said that kind of as a joke because I copied my exact tweet where I said 10K and I replaced it with 8,500. So it was word for word. That's why it was kind of a joke. But I really do feel that we're not going to go below 8,500. That would be the perfect spot to fill that gap, and then complete that segment and then continue our upward move. That would be the perfect scenario.
You mentioned the 50% fib level. That's exactly at the CME futures gap.
Oh yeah, awesome. That's I noticed that.
And the only reason to think people are gonna buy there is because we are in a bull market. This still is it's a correction, but it still is a bull market if you count from.
Well, no, obviously that's why I tweeted earlier and I said crypto Twitter, the only place where we can go up 350% on a parabolic run, and then people start freaking out like we're going to zero because we have a correction. It's insane.
Yeah.
People are ridiculous.
But he did mention this 618 too as an option.
Yeah, we talked about that before.
A low probability, but it is open.
Yeah, no, well, we talked before about when you are particularly hyper impulsive, where you have a really, really big impulsive run, it's not uncommon to only retrace to the 382 or even the 236 in some cases, but usually the 382 or the 0.5. When we were looking at those old charts, there were some instances where BTC did correct to the 618, but it's very rare when you're talking about runs like this. This impulsive of a run where we go up 375% on a parabolic run, that's...
I agree.
Yeah, 350% on a parabolic run. It's so impulsive. There's so much support and buy pressure on the buy books that I simply cannot imagine correcting all the way down to the 618 would be insane. And look at what else we have. Hold on, let me pull this up.
But there is one thing, Vader. A parabolic run is also very rare.
Oh yeah, obviously.
So by definition, both are very rare. Are we there? I'm not hearing you.
Yeah, I'm here. Hold on.
Okay.
Where is... Bear with me a sec here. There we go. I wanted to copy this over another time so you can see. There we go. I can clean this up a little bit.
But these moves are different than when we were at 6.4K. Because then we had a front runner from the alts, followed by BTC, and now everything is coming down.
I missed the last thing you said, but hold on. Let me just finish what I'm doing here. I wanted to clean that up a little bit so I can see these fibs a little bit better. So yeah, check this out. So this is where we are right now, around 9,500. Ideally, that 0.5 is there. That's right at 8,500. And we also currently have other supports there. If we start with some sideways movement, we have a really strong support in the low between 9,300 and 9,400. I mentioned in one of my earlier comments. This is a really strong support as well. But if that support fails, then yeah, the 0.5 at 8,500 is perfect, and it also matches up with the 99 EMA. Now, the 99 EMA did break through, and it is above it right now. But if we were to drop really fast over the next 24 hours, it would still be relatively close. The other scenario that can happen, we might be able to move sideways over another 24 hours or so if we're moving slower than we have been on this big drop. If we go a little bit sideways, we might end up bouncing like right off of the cloud right at the 0.5 as well. That's another possibility. Now, if I pull back down to hourly, you can see that 0.5 as well. I'm going to start a fresher chart. Yeah, that 0.5 is right here, the green one. Let me move these out of the way so we can see it. You know what? I want to stick on topic. We'll come back to going over BTC. Sorry, I don't mean to bounce all over the place, but I'm going to focus on these other topics and finish that first. So hold on one sec. All right, so we are at 26 minutes.
93, 94 support, you think?
Huh?
Honestly, that chart was really hard for me to see, but you were saying 93 to 94, there's a pretty good...
Yeah, right around there. We're going to get back to that in a few minutes. I just want to finish the other topic we were going over. So, to finish my thoughts on the risk stuff, we went over when I talk about things being high risk or low risk trades, medium risk, medium high, what that refers to, and the different variables I use to calculate those descriptors. Now, the important thing when people say to me, hey, I haven't entered, this is going to be at all right, so when you see that I'm sharing trades, sometimes people say, hey, I saw that you were sharing trades that said they were high risk, so I didn't get in because I didn't want to lose money. So if you understand how I calculate those descriptors, high risk or low risk or medium high or medium low, you'll be better equipped to make decisions based on your own personal circumstances. So we've talked a lot in the past. For older members, obviously know this stuff. Newer people aren't as familiar. So let me break it down. Everybody has their own personal risk tolerance, and you can use that to build yourself a risk profile. That risk profile means several things. It could mean what risk you are willing to accept, what type of loss you're willing to accept. There are a lot of variables that go into your overall risk profile. The types of trades you want, how you want to diversify. I have a portfolio worksheet for newer members that haven't seen it. I can actually make a newer one of these, an updated one that has that you can manipulate yourself. So I can do one that isn't filled in, and then you can use mine as like a template. So let me show you. This is a high risk example. Ha! That's funny. I wasn't supposed to do that. Let me show you. Here we go. All right, so here is my portfolio worksheet that you can use as an example, where I break down my allocation for this portfolio design is a higher risk portfolio design where I have a lot of money in higher risk scenarios. So this is 25% in large cap, 25% in mid cap, 20% in small cap, 20% in micro cap, 10% in ICOs and speculative trades. Any speculative investment is going to be extraordinarily high risk, right? All ICOs are speculative investments. You're getting in really early, knowing full well you might have to wait 2 to 5 years to make anything off of this. But by getting in at those really early stages, if it does end up being the next big thing, you could get rich over it, right? So those are speculative investments because you're speculating on the future valuation based purely on the information you have about the project and the technology without having any viable technical reasons or fundamentals to really support your investment. That's why you don't want to put a lot in, and that's why with this layout I only have 10% designated for ICOs and speculative investments. That's actually pretty high. In most cases, you should probably only have 5% of your portfolio at the most in things like that. Because you have a very, very high probability of losing your money. If you find something that you like and you happen to have 5% of your portfolio in positions like that, and you find out about some project that's amazing, it's a huge opportunity, you can get in at the ground floor, and you really want to do it, obviously you can take on more risk and do it. You don't have to be 100% committed to this, but it is really good to design this beforehand and work off of it as a rule. Consider it a firm rule that you have to stick within the bounds of your own risk profile. So when you're doing a worksheet like this, you want to look at over here, you want to list out the various sectors you want to be in and what coins you're in. So here I have, this is everything for my sample portfolio, where I said I can be in 5 of these, 5 from this section, 2 from this section, 2 to 5 from this section, 2 to 5 from this section. And you want to diversify so you're in these different industries and sectors. So just like with stocks, you have sectors like oil and gas and energy, technology, social media companies. You have manufacturing companies. You have auto industry. So you have different industries, and you can diversify across those industries. You don't want to put all your money into Philip Morris, Altria Group. That's who owns Marlboro and other cigarette companies. Because with cigarettes, they can have some law that gets passed that makes it illegal to smoke, and now all of a sudden the price of that stock drops by 75%. So you don't want to go all in something that's risky like that. You want to diversify as much as you can. So by picking multiple sectors, not only are you diversifying into different coins, but you're in entirely different sectors. Think of it this way. Imagine you put 10%, say you have 20% of your portfolio in currencies, 20% in platforms, 20 in exchanges, majors, and then privacy coins, right? 20% is in each of these. Say some news comes out where the government is really cracking down and they are going to show up at your house and take your personal belongings if they have to get every penny that you owe them for taxes. And the only way that you can trade and hold crypto assets where it's impossible to find out what you have is with privacy coins. If that's the case and that news comes out, you might see the entire market take a really hard fall, but privacy coins might do a 10x, right? That's just, obviously, it's an exaggerated example. We're never going to see that happen. But I'm just saying, hypothetically, if it did, you have a scenario where you're in a particular sector that isn't actually affected by that bad news. Look at exchange coins. What if an exchange law comes out that says it's illegal to trade on any of these exchanges unless they are, specifically approved and regulated by the European Union and the United States government? Well, now you might see several of the exchange coins drop in price substantially, but you're not going to see any effect from that news on some of these others, like the platforms. Everybody understand what I'm saying? It's not just important, when I say diversification, I'm not just saying you need to be in multiple coins. I'm talking about you have to be in different strategies, you have to be in different sectors, you want to have different capital classifications. So you want to get into here several of your trades. So this is for longer term investing, but some of your positions should be in larger cap. Large cap is more than 10 billion in market cap. Mid cap is between 2 and 10 billion. Small cap 500 to 2 billion, and then micro cap is anything under 500 million. This needs to get changed because this is older and we've lost a lot of capital in the market since I made this template. So realistically now, I would probably say that micro cap should be under 250 million or maybe even under like 150 million, because a lot of those companies have gone down to 20 to 50 million micro cap capital. God, Jesus Christ. The capitalization. So if you diversify into some larger cap, smaller cap, micro cap, and then you diversify across these different sectors and specialized coins, now you are protected to an extent from one area taking the big hit. A lot of the time you'll see a lot of the micro caps get killed, but the large caps are stable, and it's beneficial to be in some of the majors, some of the large cap coins like LTC and Bitcoin Cash and Ethereum. So yeah, more often than not, I would try to take a more middle of the road approach. So I would have maybe half of my available capital. This is just my trading portfolio. I have a separate longer term portfolio. So for my shorter term stuff, I might have one worksheet where in shorter term stuff, I'm 50% of my short term trading. I'm not really worrying about this stuff because I'm looking to get in and out. I'm doing swing trades and day trades, so a lot of these things don't really matter. But with my longer term stuff, I would focus more on this stuff, and I would probably have, well, what I have had is like 50% of my entire long term portfolio used to be in majors. So it was Bitcoin, Bitcoin Cash, Litecoin, and Ethereum constituted 50% of all of my holdings. And that was a great way to do it, because even when all the alts were getting killed, those usually held up pretty well. When the alts were getting pumped like crazy, you would see the majors also get pumped. They might not do a 30, 40, or 50% like the alts do, but they could easily do a 10 or 15% move. And that would happen repeatedly over and over again, especially during a really bullish run. So it's important to manage your risk, but it's also important because it gives you more profits. You're going to make more money if you're in a more profitable play. And there's nothing more profitable than the stable, larger cap coins, because they don't have the risk associated with them, even though they don't blow up for a 200% run in a 24-hour period like the alts do. So yeah, it's important to diversify in all these different ways, not just being in multiple coins, like I said. And that's a key aspect of your risk profile. And when you develop a plan for risk mitigation where you want to limit your exposure and limit your risk, that's going to be a supremely important variable. What does my risk profile say about this? I have a plan, I'm diversified, I'm willing to accept X number of dollars in losses. So you want to have all that stuff worked out beforehand, and then you could figure it out. So come full circle back to what I was talking about before, where we have high risk trades, low risk trades, things like that. I don't have that on this version of the worksheet. This is more of a longer term investment worksheet. You can have here, I gave an example, long term 40%, 20% could be swing trading, and then the other 40% would be day trading, really short term stuff. And that's just an example of one way to do it. But if you have a whole worksheet like this dedicated to your long term side and then one dedicated to your shorter term side, that's fine too. So if I share a bunch of trades and I say, this is a low risk trade, I'm only risking 1%, and my stop loss is only 1% below my entry, so it's a very, very low risk trade. Well, in that scenario, if you're based on your personal risk profile, if you're trying to put more money into lower risk trades, that might be something you want to get into. So you're going to want to take a look at it, right? So if you have $10,000 and you have $5,000 for long term stuff, $5,000 for short term stuff, and the $5,000 for the short term stuff, you've done really well and you're up quite a bit. So that $5,000 you're currently trading with is mostly profit from the prior several months. Now you might be willing to take on a little bit more risk. So if you see that I share a couple trades that are high risk trades, for you, you might be willing to take those trades because you can afford to lose 2.5% on that trade. It wouldn't be a very big loss, and you've done really well recently. Now, for people who haven't done well, people who have lost, they started with 10 and now they're down to $3,000, they're not going to be willing to take those losses because they have to preserve every bit of capital they can. Preservation of capital is the most important part of any investor's strategy. At the end of the day, whether or not you're making profit is very important, but not nearly as important as whether or not you are maintaining and preserving your capital. Because I can go through a 2-day period where I don't make any money, but I'm not upset or anything because I haven't lost any money. So now I have another chance, right? I can go right at it again. If I don't lose any money today, but I don't make any money trading, that's fine. I could just have another try tomorrow. I take another swing, right? Next pitch comes down the middle of the plate. I knock it out of the park. Great. I still had all of that capital available because I didn't lose any of it. If I had lost 20% of my available capital, well, the next day when I make that really big trade that goes up 30%, I'm going to be making 20% less profit than I would have made if I didn't lose that capital. That's why risk mitigation and risk management is so important. So again, we have the worksheet that kind of relates back to how I designate certain trades as high versus low risk trades. That's a personal situation. You can't ask me whether or not you should get into a trade because I don't know your personal risk profile, right? I'm not aware of what your risk tolerance is. I'm not aware of what your capital looks like, how much you're able to afford to lose. What are your goals? Are you trying to trade for a living where you want to make enough money that you could pay all your bills and you don't have to work a full-time job? That's perfectly fine, but I don't know that, so I can't tell you whether or not this is the right trade for you. It's a very personal decision, and that's why when people say, not financial advice, I don't tell you what to trade. A lot of people say it because they don't want to be held responsible and feel bad if you lose money and you say, hey, it's your fault. You told me to get into this. I say that not because I care. I couldn't care less if you blame me for, I'll tell you you're wrong and tell you to go fuck yourself because it really isn't anybody's fault but your own. But that's not the main reason why I tell people I can't tell you what to say. I can't tell you what to do. You have to make that decision for yourself. It's because I really can't. it's irresponsible of me to do that, because if I tell you this is a great trade, you should get into this trade with me, go put all your money into it right now, and then you end up taking a loss. I mean, I'll feel bad that you took a loss based on my advice, but what's more, I would be mad at myself because I gave you advice I had no place giving. Forget about the fact that I'm not a professional consultant, that I'm not a professional licensed financial advisor. What's more important is I didn't have that information that's key to determining your own personal risk tolerance. Um, okay, everybody understand all that stuff? Any questions about determining your risk profile and risk tolerance and deciding whether or not a trade is right for you? I'll give you a couple more examples where you can look at a trade and see this trade looks really good. Jesse said it was a low risk trade because he's only risking 1.5%, and that's a pretty small amount for him, right? If you see that trade and you think it looks really good, but you're not willing to risk 1.5%, that's going to change whether or not you get into the trade, right? But the other thing to consider is, what if you don't get in at the same time as me? So I might share a trade that says this is a high risk trade. I don't suggest that new traders get into it because there's only a 40% probability of success, and I have to risk a full 3% with my stop loss to get into this trade, because the next support is like 2.8% below my entry. So now my stop loss has to be below that support. Now I'm risking a full 3% to get into this trade, right? You're with me so far. So in that scenario, not only am I getting into this trade where I'm risking 3% that you want to get into, but I'm getting into it at a very specific price. And if you ignore that, then things completely change and you don't have control over your risk anymore. So if I were to buy at $10 and I say this is a high risk trade, I have to risk 3% to get into it, and you look at the trade and say, that's a high risk trade, I really can't afford to get into it. Even though Jesse said it has a high probability of success, that's too much risk, I'm not willing to take it. Well, ignore my chart for a second. You pull up the chart and check it out, because if I bought it at $10 and you look at it and it's down to $9.64, well, shit, now you could absolutely get into it, right? Because now the price has gone down. Now if you buy in, you might only have to risk 0.6%. So a better example where I can do the math quickly. If I buy ABC coin at $1 and I tell you it's a high risk trade, my stop loss is down at 97 cents because there's a really strong support at 97.5 cents. So I have my stop loss at 97 cents. So I get stopped out only if that strong support fails. Well, now you come along and say, I don't really want to risk 3%, so I'm not going to get into this trade based on my chart. But if you look it up and instead of being at $1, it's down to 98 cents, now you can get in and set your stop loss right where mine is, right at 97 cents, except now you're only risking 1 penny. Instead of risking 3 cents, you're only risking 1. So your exposure, instead of being 3%, is closer to 1%. It's not exactly, because math, but everybody understand what I'm saying?
Yep.
Yeah, a lot of the stuff you need to do on your own. That's why I'm so adamant about not being a signals group. Now, realistically, I realize I share trades. Right now, we really don't have any good trades to get into. I haven't come up with any good trades, well, only one or two. But to some people in the group, they might say, well, Jesse hasn't had any good trades in the last 2 days. I would beg to differ. I went all in into Bitcoin yesterday, and it went up 10% right when I got in. That was an amazing call and an amazing trade. Just because it's gone down since and everybody's out now doesn't mean that it wasn't a fantastic trade. I made a huge profit. I made thousands of dollars. Now I have all of my money out of the market waiting for the bottom so I can get back in. And where was I going with that? Hold on. My brain's fried. Yeah, so I'm out of the market and I have all of my capital in place ready to go. So now you might look at it and say, Jesse got stopped out of all of his trades from yesterday. He obviously didn't have any good trades. Obviously I did. You have to look at the details and you'll see what's going on, right? So sometimes a good trade is a really quick one, but you have to be fast. You have to know how to manage your stop losses and do that all pretty quickly. You can't just see what I'm doing and say, Jesse went all into BTC at 10K, and you follow me and do the same thing, right? Sure, you could have made a 10% profit because it did go up 10% from my call. But on the other hand, you might get in and then the price just collapses right away, and you could take a huge loss if you don't set a stop loss and manage things well. So it's not even don't just blindly follow me. It's more of you can blindly follow me if you want, but you need to have the skills to be able to do what I do. So if you get into Bitcoin when I got into Bitcoin, but you didn't set your stop loss like I did, you didn't move it up like I did, well, now a great trade for me, the same exact trade for you, might be a horrible trade. So yeah, all that stuff is very important to consider every time you're making a trade. Is it the right trade for you? Can you afford to lose that capital? How much do you want to risk? So yeah, following blindly does not work, and these are the reasons why. That closes out my whole risk topic. So before I move on to the next stuff, anybody have any questions? Complaints, criticisms? No? Come on, guys. You have all these people. I said before, if you're going to be in the voice channel, but you don't actually want to use your microphone and talk to me, you can just listen on the YouTube stream. There's no reason to be in the voice channel unless you're going to make use of your microphone, which is fine. Like, if you're shy and if you're a little pussy and you don't want to ask questions, that's fine. I won't make you feel bad about being a little pussy. I won't use my Jew guilt power to make you feel bad that you're not participating. That's totally fine if you just want to watch the stream. But there's like 15 people on the voice channel. None of you guys want to talk. All right, you guys are obviously too shy.
Just no questions on the rest.
Maybe I'm just so good at explaining shit. Nobody has any questions.
It was pretty good. I'm trying to build up portfolio. Well,
You're what?
I'm trying to use your chart and kind of build up. So paying attention. So
Yeah. What did I have this sector spreadsheet? Yeah, here we go. This website is a great tool where it talks. This is all financial transaction. So this is different currencies: Bitcoin, Bitcoin Cash, Bitcoin Gold, Decred, Stellar, Nexus, and then they have privacy coins. That's where I got some of the examples I used on my sample portfolio worksheet. Then there's stable coins and exchange-based coins, social tipping subs, marijuana subsector.
sorry, what was that site?
It's porn subsector. Look at that. Sex coin, titty coin. That actually is a real thing. It wasn't even just a joke. Grab it by the tit coin, I said. It's Trading Heroes, currency sector. If you go to my... where'd it go? Hold on. No, that's why. The portfolio worksheet has a link for it right here underneath the different sectors. Trading Heroes sectors cheat sheet. You can use that link right here. And this document is under premium files on the under the premium group section. There's a channel called Premium Files and Documents. There's only like 3 things in there, but the second one down is the portfolio worksheet. All right, we went over individual risk tolerance, all that stuff. Again, nobody has any questions about this stuff. Seriously, I just covered a whole bunch of really important shit. I wish you guys would have questions. I feel so uncomfortable when you don't have questions because I'm like, shit, somebody's going to lose money in the future because they're not going to be prepared and they don't have a good understanding of risk management. And then I'm going to yell at them and say, well, why didn't you ask me questions when you were in the stream? In fact, there's 10 people who are actually watching the live stream, but there are 13 people who are in the voice channel right now listening to me. So do you guys even know that you're in like a voice channel where you can talk back? And did you know there's a live stream on YouTube going on right now? Because there apparently seems to be 3 people in here on the voice channel who aren't even watching the stream. All right, so that's all the risk stuff, risk management, portfolio worksheet, very important stuff. Hopefully you guys think of questions and ask me. But if you don't have any questions, I'll move on to the next topic. Who now and the what? Okay. No questions about risk-based topics. It is what it is. All right, we are 51 minutes in. So, go over a couple more, one more quick topic or two, and then we'll move on to looking at BTC and the charts. Anybody in the voice channel have any questions that we haven't gone over? Any topics you want me to mention or go over, explain, anything like that? Anything at all?
Hey, Jesse, you hear me there?
Yo, yeah.
So having to do with people chatting, I know in my case anyhow, I was just barely driving and just listening as I was on my car, but the audio is so much more clear in the voice channel than it is on YouTube. So for me anyhow, I was watching YouTube and listening to it on the voice channel, if you're wondering why maybe some people are in the voice but not talking, because I was driving so I couldn't really chat back.
Yeah, I prefer to make fun of everybody, though.
That works too.
Because you're all little pussies who won't ask questions because you're too shy. Well, we used to have we used to have whole things. We used to have like 30 people. We'd all be talking about strategy. Some of the best trades we've ever had in this group start with like somebody in the voice channel saying, "What do you think about this coin?" I'd pull it up and look at it, and I would spot some like amazing entry with some incredible support. We would buy in, and then it would become like my ONT trade, which did like 218% in a week. So I really like interacting and talking about stuff because it helps you come up with other stuff you didn't already have. So. Huh?
That was me most of the time.
Yeah. No, I'm not. You're talking about when we were looking at gay porn. I'm talking about looking at good trades. You only came in for the gay porn.
Hey man, so quick question, because I think I missed the very beginning of it.
Mm-hmm.
When you're talking about the risk management and a high risk trade, really quickly, if I heard right, so the high risk trade sometimes is because
I'll explain it really quick. So yeah, when I say this trade is high risk, medium high, medium low, medium or low risk, I'm using a few bits of information, multiple variables to come up with that designation. I'm using a couple functions that I've developed on my own. I have some equations, some functions where I look at the spread from the high low over a 24-hour period, looking at 4-hour candles or hourly candles. Then I look at the daily, and by looking at that different spread, I can see whether or not the more recent price action is an exception to the rule, or if it's common. Like if it's common to see ABC coin go from 5% down to 5% up twice within a 24-hour period. If that happens all the time, then it's going to be a high risk trade because it's very common to get stopped out before it then goes on a run back up because those wicks are all over the place. Some charts aren't like that. Some charts are really tight, and you'll notice it's very uncommon to get these big wicks that go from one candle to the next, where just between 2 hourly candles you have a 10% spread. That's a really aggressive spread. So I use that data to come up with a general between 1 and 10. I rate it on how high the risk is. Essentially, that's my probability of success. So a 7 out of 10 means that I feel like there's a 70% chance that this trade can actually work out without getting stopped out. That's what when I say there's a 50% chance of success, I'm not saying there's a probability of 50% that we go up to my target and the trade is completed. I'm saying there's a 50% chance that I won't get stopped out on this trade. So that's part of it, and then the other half of it is how much I'm investing. So if, how much I'm putting into it, the relative percentage of my capital, but more importantly, what the stop loss is. So if I'm getting into a trade and I'm risking 3% of my capital on that trade because I enter in at $1 and I place my stop loss at 97 cents, um, that's getting to be on the higher risk because I'm risking a little bit more capital than I would like to. I'd like to risk under 2% capital on these trades. But if the probability of success is like 75%, but I'm risking 3% on the trade, that's still a low or a medium low risk trade. On the other hand, if I'm risking 3% on the trade and I only have what I would consider to be a 40% probability of not getting stopped out, that's going to be a higher risk trade. So it's a combination of multiple variables working together to give me that designation. So when I say something's high or low risk, that doesn't necessarily mean there's a high probability or a low probability of having success with the trade. It's more a combination of the two. So if there is a 70% chance that I don't get stopped out on this trade, but I'm risking 3%, it might still be considered a low risk trade because I'm risking more, but I'm so confident that the trade's going to succeed without stopping me out prematurely.
Gotcha. Yep, 100%. Thanks.
Cool. All right. So last couple topics we'll go over then. If anybody has any questions, feel free to interrupt me. Just hop in and just say, "Hey, quick question," because I don't like getting onto like two more topics and then having to answer a question about the first topic. All right. So let me just make a note of the time because I'm going to start putting timestamps onto these things. So we're at 57 minutes. So 57 minutes in. Moving on to new topics. So. Let me just see here. Trend lines.
Vader.
Yeah.
The only thing is investing in crypto. If you only invest in crypto, that's not a good thing to do.
Well, that's what we're doing here, though. Are you talking about like your portfolio diversification and stuff?
No, but for everyone, for their own financials, you have to be in real estate, and you have to have a part in crypto, but also in normal stocks and cash money on your bank.
Well, yeah, obviously, yeah, but we don't really do that stuff here. Obviously, when I talk about diversification and the risk profile and everything, we're talking about it within the confines of our market that we trade. If you also can trade in forex or make investments, longer term investments into stocks and mutual funds, or especially ETFs, I would suggest trading ETFs. Avoid leveraged ETFs because I made a lot of money on them during the financial crash. I was in a 3-to-1 leverage.
The thing is, these young kids, 20-year-old, they want to make 80% a year.
Yeah, I know exactly,
they
but
just
no, yeah,
don't realize that if they make 6, 7, 8% every year until they're 60. Yeah. It's going to be a lot of money.
Yeah, obviously. So we're not giving financial advice here, so I don't really care about that stuff. If you guys want to worry about we're talking specifically. Yeah, no, I know. We're talking specifically about the crypto market. Realistically, if you want to invest in the future, crypto is great. You should probably have a Roth IRA or a 401k if you have a job where they match. That's a great way to get extra money to try to build up your retirement fund. You should be looking at ETFs and regular mutual funds, but mostly if you're into trading especially, you want to look at ETFs or exchange traded funds. It also gives you a mechanism of trading multiple industries and getting diversified without putting in the legwork of the research. But yeah, we don't really have to worry about that. But yes, he's right. It is obviously important to diversify into different markets and investment structures in addition to just crypto. Especially since crypto is so risky, you don't want to just day trade penny stocks. You want to invest in Amazon, Google, and Apple and hold that for the next 50 years. You don't want to just get into a bunch of penny stocks that could do 50%. I mean, that's fine when you're young, but eventually you get to the point where you need to start planning for the future. So, all right, next couple topics. These were some suggestions that people had. And then we'll go over the charts, BTC specifically. Know what they are. Somebody said major resistance, minor resistance, the difference between the two, and then trend lines and drawing. That all comes together, and then wicks versus bars. This is actually really good because all the things he mentioned all fit together. Now, we've done prior Vader University topics, videos about this very topic, But let me go over everything, like just one quick, fresh review. So, the most important concept to master when you're doing TA, not, risk. I say, like Winnie was saying before, joking around, saying I say everything is most important. They are, right? So risk management is the most important. Preservation of capital is the most important. But they're in different categories. When I'm talking specifically about TA and you're learning how to do technical analysis, the most important thing you can learn and understand is support and resistance. Because with a firm grasp on how support and resistance works, you can utilize and understand everything else. So Fibonacci is just giving you support and resistance levels. Elliott wave is just drawing lines and connecting the dots between a support and a resistance. That's all it is. With Elliott wave, you're saying there's a support right here and a resistance right here and then a support right here. So wave 1 is going to go from the support to the resistance, get rejected, back down to this next support, and then it'll go up to the next resistance. So you're just connecting the dots. You're using support and resistance. That's all you're using. You're using hand-drawn horizontal supports that you look where you can say, hey, look, it always bounces right over here. That's a horizontal support. You're using horizontals. You're also using Fibonacci to say, hey, there's a support right here that matches up with Fibonacci, and the 1618 extension is usually where wave 3 could be a target. So you're using these different support and resistance tools to give yourself an Elliott wave count. So you can't use Elliott wave without having support and resistance. It's the most important thing that you can learn when it comes to TA. So, the question from one of our members was, what's the difference when you're talking about strong or minor or major resistance and supports? So that's something I'll quickly mention. Trend lines, how to draw them, and then do you use wicks and bars, and where do you do? So let's go through all those. Like I said, most important concept. Now, let's list out what they are. So you have, when you're talking about support and resistance, you have, I have an idea. I can save this later and post it in Vader University. So, support and resistance types. So you have horizontals. That's support or resistance, SR, based on price action and order books. So what I mean by order books is you can look at the order books and see that there's a support. If you look at Bitcoin and you pull up the order book and you can see there are a ton of buy orders that are right here, right at 9,400. There's a ton of buy orders at 9,400. That is a resistance. That is a support, rather. I did a video the other day. Actually, we talked about it in the group first on the last live stream. But when people talk about buy walls and sell walls, they're talking about an accumulation of orders on the order book. So if there's a buy wall at 9,400 that manifests as this white line is a support. There's a support on Bitcoin because there's a buy wall at 9,400, which means if you go right here and you start selling 1, 2, 10, 15, 100 Bitcoins and you're selling off all your Bitcoin, there's a wall of people, right? And their orders 100 feet tall right here that are eating up all those orders. So every time you sell another Bitcoin, there are so many orders right here that you would have to sell 500 Bitcoin just to go down any lower than this 9,400 level. So that's a buy wall on the order book. That's also a horizontal support on the chart that's based on price action, where you can visually see and identify with the naked eye areas where you have support and resistance. So when we come down, we get a lot of support right here. We bounce 5 candles in a row, and it doesn't want to go any lower than that. That means that if you were to look at the order book, you would see that there is a buy wall right there. That has to be. That's the reason why you have supports like that. So based on price action, just by looking at what the price does when it gets down to a certain level, you can identify these horizontal supports. So if I were to pull up here on just a random chart, here's APPC, for instance. Just from moving around the cursor, you see the dotted line that they give you, so you can identify where your cursor is at a given point in time. Sometimes I will just look at a chart like this, and I'll just do this. I'll just kind of move around and spot it with the naked eye, and then I'll move my cursor up, and I'll say, well, there we go. There's a really strong support and resistance. I can see it with the naked eye. And now when I put a horizontal line right there, you can really see it, right? So what that says is, initially, there was a big dump, kind of like the one I took before we started the live stream. It broke through the support briefly, but then it broke through even less with just a wick here. And then the next time, it didn't really break through at all. Then the next time, we had like 15 candles in a row, and these are 4-hour candles, right? So just try to imagine how strong this 1062 support is. If right here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 candles on the 4-hour chart, means that's actually 40 candles on the hourly chart in a row. 40 candles in a row that were unable to drop below this 1062 support. So this is clearly an incredibly strong support. After that, 40 candles in a row, we had another attempt over here, another 5 or 6 candles on the 4-hour. Over here, another 1, 2, 3, 4, 5, 6, 7, probably 6 or 7. So you're looking at another 24 hourly candles where you're just getting support from this exact 1062 price. Eventually it breaks, but when we were at that point before, you can imagine when it came down, I would have said this is a major support. This is a very strong support, and there's a very high probability that it holds. In this case, it did fail, because it always has to fail eventually, right? In most cases. But if we were back here and I saw this and this and this and this right through this point, and then we started going up and coming back down, right? If, say, look, we went up here, we had this big spike up to 1560, 1570. When we started coming back down from that spike, I would have said this is a major support just based on this area over here. This section right here, right, is enough. Where all this support, I would have considered this 1062 a major strong support. So when we started coming on this leg, when this started coming down, I would have said that's a really strong support, we're not going to break. And of course it didn't, right? It held and then it bounced. So imagine in that scenario, we're coming back down, we test the support, you placed a buy order right above that support line, right? What would have happened? You would have actually gotten into this trade right here, right above that support, before it went up 155.74%. And all you had to do to get into a 160% profit trade was identify one really strong support and use that to place your order, right? Isn't that pretty amazing? I didn't plan this out ahead of time either. I just pulled up APPC completely randomly because I was looking for an empty chart that didn't have a lot of my bullshit on it, just so I can show you how this works. And sure enough, I mean, look at this. That was pretty insane, right? So just pulling a random coin, I was able to identify a strong support. And if we were watching this live back at this point in time, I would have identified this as a strong support and placed a buy order right on top of it, which means 170% profit. So support, crucial. Support and resistance, the most important topic you need to master. Right here is just an example of a horizontal support. Something else you want to look at for supports eventually. The easiest to start with, obviously, is horizontals, because there's just based on price action. You can look at it with the naked eye. You can move around your mouse like this, and when you see that dotted line, get to an area where you keep getting, a lot of support or rejections. That's gonna, like right here. Look, just moving around the dotted line for my cursor, you can see big support bounce right here, big support bounce right here, big support bounce right here. Eventually, it broke through. Once it broke through, that became a resistance, right? So now if I follow this line over, you can see it was a really major resistance right here, and that caused the rejection on the way up. Came back down, and then it made another move where it pushed up with a 3 wicks just above it, but it ended up coming back down, and then look, then again right here, another instance where this was a strong resistance. So besides this section here that I'm pointing at with my cursor, where a few of those wicks broke through, it went from being a really strong support over here to being a really strong resistance over at this point. And in the future, right, that's why I don't delete stuff off my chart, because if I have this blue one right here and this blue one over here as a resistance, if I keep that on my chart, if we ever get to this point again, as soon as we get up to this level, once we start testing this resistance, I'm going to be interested. And then if we break through that resistance, that's going to become an extremely strong support based on how it behaved prior. Now, over here, it didn't hold as well, so it's possible the support isn't very active anymore. Whatever algorithm was being used in the past that caused the formation of a buy wall right at 1062 might not be active in the market anymore. You never know. Sometimes these things don't hold forever. Sometimes they do. Again, that's why I leave on my charts, I have these really old support and resistance from It could be 2 years old, but I keep it on the chart because it might actually come in handy in the future. So in the case of APPC, those are a couple of horizontal supports. Now the next easiest thing to use support for when you're looking at support and resistance would be trends, trend-based support and resistance, and there's a couple reasons why. Let's see, we're at 1:10:45. Hold on. 1 hour, 10 minutes, and 45 seconds. Move on to trend lines. Now, with trend lines, I was going to go into Fibonacci because Fibonacci actually is extremely important as well. I wanted to go over that stuff with you, but then I realized what would actually be better, and then we'll call it quits after this and move on to looking at the charts. We can go over Fibonacci and the other types of supports later. For now, I just want to go over the basics. Support and resistance based on horizontals, looking at the price action, and support and resistance based on trends. Now, the reason why the trend thing is so important is because it gives you a lot of information. When you start combining multiple indicators, you get a plethora of information you wouldn't have otherwise had. Let me give you an example. We were talking about Elliott wave, right? You can't really come up with an Elliott wave count and have a higher level of confidence unless you're using these other tools. So if I'm able to identify a really strong support down here, and then there's a strong short-term resistance here. Oh, sorry. Rewind. Just to finish, the person who would ask me about this stuff also said, when is it a major versus a minor, or a strong versus a minor support or resistance? And this is where. This is a major support because of just the sheer volume of instances where this became a crucial support level. Jesus, look at that wick. That was nuts. Holy hell. That might actually be a good support to keep in mind in 226, in case it ever does go that low again. Anyway, they had said when is it a major or a minor. So in this case, I would say this is a major support. That's a major resistance because we have some major moves here. This was a really big dump when it first got listed, shortly after it got listed, and it got a ton of support. And then it ran up, and when it came back down, at first, it got a ton of support. Again, right at that support. It actually took several attempts. First, 2 candles got really strong support, came up, and then look, 2 more candles with more strong support, and then it went up again. So it was really trying to hold. Eventually, it failed, and it broke through. But that's considered a strong or a major support. So when I'm trying to determine whether or not I would designate it as a strong support or a minor support, a major or a minor, I'm going to look at that, how strongly it performed in the past, how many times it held. Like in this case, this held an absurd amount of times. If you were to, again, look at the hourly candle, this whole section here is going to have like 100 hourly candles that couldn't break below that support. That's clearly going to be a major support. But if I were to erase this first half over here, say that part is not visible anymore. Say it never happened, right? We never had this support right here doing that part. All we had was this section of the chart. And based on this section of the chart, I need to find a good support. Now, this is not going back for 2, 3, 4, 5 months. This one actually really went back, as far as a support, went back a year, pretty much, to August, right? So this is a long-term, long-duration support that's been there for a year that is still held up during the test of time. It still repeatedly gets tested and holds very well. But if you start looking over here, you'll see it's not holding nearly as well as it used to. And it's still a viable support, but it's not nearly as strong as it used to be. So if I only had this part of the chart available to me, I probably wouldn't even set that. I would use something like there we go. So looking at this, I would say, all right, right here. See that? Like that was a really strong support right here. And then a nice bounce. Eventually we came back down and again got some strong support from it. But then we got cracked, right? It got severed, and since then it hasn't really held as a strong support. So the next time we come back up to test it, I'm probably not going to say this is a strong resistance. I would classify it as a regular resistance or a minor resistance, because I don't expect it to have the same level of support or resistance that we would get out of something like this that had a year-long track record of constantly serving as a strong support that just would never ever break. It would take forever before it finally broke. So in this instance, yeah, that would be more of a minor support. Let's pull it back down to the hourly and just come up with one more example so I can show you what I mean. So when I look at the 4-hour or the daily, like I can show you on the 4-hour or the daily chart that some, this, not this one, but the other one we were looking at way back, right? Back wherever it was, had like 50, look at this. All these tests, like this is like over 100 candles that could not break below this support. So that's clearly a really strong support based on how far back it went and how well it held up. So when you're looking at shorter time frames like the 1 hour, when I'm looking at the 1 hour chart, I'm not going to spot many supports that I would classify as a major support or resistance. Everything I can see here is pretty much, I'm just going to label it support or resistance like I do on BTC here. So these are minor SR because I was watching this chart and I noticed, oh, look, there's a little bit of support right here. The next time we come back down, we'll probably get a little support. And then sure enough, look, we did get a little support. We got 1, 2, 3, 4 hourly candles in a row that held right on that support. But then it eventually broke. So when I'm looking at the minor ones, I'm thinking of them as a potential support that may hold, but I don't have a ton of confidence in it. Now look what happened here. This is actually a really good example, right? We had a minor support here that didn't really hold. A minor support here that held pretty well, right? But it really only held for like 4 hourly candles. Then it failed. But then we found a really strong support right here. This is where I had a strong support and resistance labeled, right, at 93.80. So since that's the nice strong support, you can see we had a really big dump right here. That green candle was a massive sell. This red candle was a pretty massive sell, and it kept getting held up right there at 93.80. So before I even saw this, I used to have this labeled as a minor support, and now I'm seeing a lot of support from the one that's labeled as a strong or a major support. So hopefully this is a good illustration of how, again, I didn't plan this out. We just randomly stumbled upon it, but this is a perfect example where I had this labeled as a minor support and it held. This was labeled as a minor support resistance. It actually did hold. If you look here and just move it up slightly, you'll see we bounced off of the lower one, which was like a support, and then we bounced right back up between the two minors. So we were kind of sandwiched between the top minor support, the top minor resistance, and the bottom minor support. And then when that support broke, now we have the strong support right here. So hopefully that clarifies where I'm talking about the horizontal stuff. Now, again, I wanted to get off this topic and just start looking at the charts with you guys. So the last thing I'm going to talk about, which I already started talking about, was the trend line thing. So part of the question was using trend lines and drawing them, and then wicks versus bars. So when you're doing various things like looking for supports, this is a perfectly viable support right here to say like that's a good support. We have all these candles getting support, and there's a bunch of wicks that broke through, but then again, candles getting support right there, support right there. It didn't touch, but it's really close. Same thing over here. Now, some people would say, oh, that's not really a good support because it has to go all the way to the end of the candle at the wick like that. That's just absurd. You don't have to worry about being that precise. Same thing with Elliott wave, right? Sometimes people will say, well, that Elliott wave count isn't viable because if you start here and you end right here, it's invalid because that retraces below the start of wave 1 and that wouldn't work. But if I draw it this way to the body of the candle, it actually still works fine. So if the only difference is this little wick, I'm totally fine just ignoring the wicks as long as it's not a substantial value. So if I look at the chart, I can tell whether or not it really is substantial. When you're looking at candlesticks, those wicks, or they're called shadows, the candle shadow can kind of tell you where a majority of the traffic of that volume was. So most of the trading, it opened up here. It had a high at the top shadow, and then the low for this hour was all the way at the bottom of that wick or shadow, and then it closed right here at the bottom of that candle body. The bodies of the candles are really what are most important. The other thing to consider is consistency. I personally don't fixate too much on the wicks, those shadows. More often than not, I will draw trend lines and stuff that just focus on the candle bodies, but I have no problem using the wicks if that's what fits the model a little bit better. I'm not too anal about it. I hate when people say, well, no, technically that's not right because you didn't use this. Technically, you're wrong because you can't include the wicks or you need to include the wicks. When people like that say shit like that to me, I'm like, well, technically, I'm better than you. So clearly, I'm doing something right. You know? Like, I don't care what the textbook tells you is supposed to work. If I come up with a way to use Elliott wave and Fibonacci that makes me a fucking boatload of money, then good for me. I don't care if I'm doing it wrong. Like, people say that to me, like, there are a couple people out there, not many, who say, like, oh, you're not even that good of an analyst because you don't even do this right. I'm like, well, first of all, obviously I'm better than you. And second of all, I taught myself how to do this in 3 months. Like, I got wrecked. Then I started studying for 16 hours a day and became so good at trading and technical analysis that I was able to consistently make profits on a daily basis and trade for a living, professionally trade for a living. So clearly, I have a knack for it and I'm doing pretty well. So just because some textbook says the correct way to use this tool is to do X, Y, or Z doesn't really matter to me. All you have to do is use these tools we have at our disposal in whatever way you need to help you become a good trader and to make good trades. So if you decide you're going to use Fibonacci, but when you do Fibonacci retraces, instead of doing a retrace from the top of this move all the way to the bottom of the move, you might say, well, what I like to do is I like to look for the biggest red candle in the middle and use the beginning of that really big red candle to start my fib retracement. And then I always look for the biggest grouping of green candles and I use that for the bottom of the retracement. Obviously, this is a stupid example because it makes no sense and that clearly isn't going to work. That's not going to do anything for you. But I'm just saying, if you say, like, oh, I like to do it this way, and when I do it this way, look at how well it works. Look at how strong that 618 was as a resistance. And look at how great the 0.5 was as a support. And look at how great the 382 falls kind of right as a major resistance here. And the 236 falls as a really good support and resistance right here. I did this kind of as a joke. I was being sarcastic, but it actually worked, right? Like, if you look at this, that actually shows these are all working pretty well. Those are actually really good support and resistance based on this fib retracement that I did kind of as a joke example. But you don't have to fixate too much to be perfect. Whatever works for you works for you. Some people, you can use Elliott wave in a completely different way. And if you figure out a way to use these tools to make you money, then you're doing it the right way. It doesn't have to match what some textbook says or some asshole on Twitter. Anyway, that's with the wick and the candle body thing. You don't have to worry about it too much. If it fits your model and it works well, try it out. And if that seems to work, great, keep rolling with it. So with the trend line topic, this is kind of relevant there. So if I were to draw this right here and say, oh, look, there's a really good trend line support right here, you can see I'm ignoring these wicks and I'm focusing on the candle bodies. That's obviously one way to do it. Wouldn't it be kind of silly if you had this really good trend line support and that was able to make you money because you are able to accurately predict a bounce off of that trend line support? Wouldn't it be stupid to not use that tool that could potentially make you money just because you're not using the wicks? Like, who cares? You're using the candle bodies and it worked really well. If you draw the same thing, but you use these wicks, right? This first one, the second one, and the third one, it's the exact same thing. But this wick here, the first one, broke through that trend support. So, oh, it's invalid. You can't use this trend line support anymore. You don't know anything about TA. You can't use it. All right, great. I'll delete it. Now, as a result, I just missed out on that potential trade where I could have put a $10,000 order in right at that trend line. And then it makes a huge bounce. I missed out because some schmuck told me I wasn't following the rules. I hate that shit. Whatever works for you, works for you. So just to close out this discussion, the whole thing with other types of support and resistance, these ones I just showed you, the trend line support and resistance. So when I say there's a trend line support or a trend line resistance, what I'm saying is we have one of these support and resistances, just like we've been doing here with the yellow and blue, except they are in the form instead of a horizontal that follows a particular price action support or resistance. I'm referring to a trend line, which is just at an angle. It's still a horizontal support or resistance, kind of, right? Except it's angled. You're just sort of taking one of these and rotating it. So I might see there's a support and resistance support or resistance, however you want to specify, on T fuel. Let's find a good one. Actually, I have a better idea. Here's BTC. So check this out. With BTC, on this pennant, which I accurately predicted this last breakout push, I identified this symmetrical triangle. And what I did was I drew two lines on the top and the bottom. The top, I actually drew it this way, where I was looking where most of the stuff was included. And then those few wicks that did break out, I drew that also just to have one extra layer where I can kind of say either one of these lines could serve as a support, and it kind of does. Because when I extended this one all the way down, you can see it worked really well here and here and here. And now, if I were to also extend this one, that sort of fills the gaps. The few candles that didn't really stay on that support get additional support from this one here. So you can see that worked out pretty well. Same thing on the bottom. So that's a trend line resistance, and this is a trend line support. Again, some of these candles have the wick inside my support structure. Some of them don't. It's not a big deal. You don't have to fixate on it. But in this case, by having these supports, I was able to identify the symmetrical triangle, which had a potential breakout when it wrapped into that apex. So once we got that apex here, and we started consolidating in a more narrow space, we got that explosive move, because that's what happens when you have a buildup of orders within a constrained range, price range, depending on what the depth of the order book is. So yeah, that's the trend line support and trend line resistance. It's just another type of support and resistance, just like we have the horizontals. I mean, look over here. I draw them all the time. This was a trend line resistance. Just going across all these candles, that formed a little bit of a trend line resistance, and then if you follow it right here, kind of get a support on the other side. So when you hear about a channel, if there's a channel that something is trading in, and hey, it's stuck in a channel here, that's telling you that it's stuck between a trend resistance and a trend line support. Just like I gave you an example, and I said when people talk about buy walls and sell walls, what they're actually referring to is support and resistance. Same thing here. When people talk about a trading range, it's stuck in a range or it's stuck in a channel, what they're telling you is there's a strong trend line support and trend line resistance, and the trading is occurring between those support and resistances. Okay, and then the last thing, why this is really important. So the reason why trend lines are actually pretty damn important, they give you a very powerful arsenal of tools. Now, I've talked before about my Ichima model. We're going to do a separate video on my Ichima model, but those are also support and resistances. We have the 99, the 55, the 222 EMAs. So we have Ichima, so what I've come up with is the 55 EMA is DS1. I call them Ichima dynamic supports, even though they also serve as resistance. Depending on what, like right here, the 55 is an Ichima support, dynamic support, but if the price was below it, it would become a resistance. So I don't know what I wanted to use to shorten it, but I was either going to call it DS or DSR. So let's just say dynamic support resistance, DSR. The 55 is DSR1, the 99 is DSR2, the 222 is DSR3, and then the top of the Ichimoku cloud, or lead span A, is DSR4, and then the bottom of the cloud is DSR5. Those are the 5 dynamic support and resistance levels in my Ichima model. So in addition to having these horizontal supports and these trend line supports, we have my 5 support and resistance levels here, which provide amazing entries based when you spot these supports. Like right here, BTC is moving sideways, right? If you had placed an order just above our first major support in our Ichima model, you could have had that order right here where I had this to set an order. It was an alert. That's my alert when it crossed 10,593. So if you had that here and you got an alert, you could have bought in right on the 55 before it went up into a parabolic run. That's why my model is so successful, because all it is, it's just giving us these supports. When you don't have any horizontal supports, like if this is all you have on the chart, you can't do a horizontal support because you don't know what the price was in the future or in the past. There's no way to really know if you're on some altcoin that doesn't have a lot of historical data. So by having these dynamic support and resistance levels, instead of being stuck with these static horizontal ones or these static trendline ones like this, now you have a lot more freedom and flexibility because these are dynamic. They're moving around. They constantly move and adjust based on the price action. So they will fail eventually, but when you start a strong run like this, you can just buy every time it comes back and touches the 55 EMA. So think about if you had actually done that on this run, right? So if we were to go back down to here after we turned bullish, we went over, came back down, touched the 55. Imagine you spent 10 grand on BTC there, right? We went up, came back down, touched the 55. You bought 10 grand more of BTC. It went on this really big run, came back down, touched the 55 again. Now you bought another 10 grand of BTC until you eventually went up to this part, came back down, tested it again right here. You bought another bag of it. And then it went up and came back down, and the 55 failed. But what happened? We got support from our next layer of Ichimoku support at the 99 EMA. Right? So once the 55 failed, the 99 is your next support. So that's where you buy. Now it touches the 99, you buy there, starts moving back up, comes back down, same thing. Goes all the way up here, comes back down, or retest it again. And keeps going. Here we go. These two candles right here came back down to the 55 EMA again. You just bought another 10 grand, right? So imagine just filling up this never-ending bag based on my Ichimoku system, right? And just imagine you could have caught that entire run. Like you could have made, not only could you have made 300% on the original entry, but you would be making more money every time you buy, every time it touches, because they are so strong and they work so predictably well. That's why I developed my system the way I did. Now, eventually, when we do start correcting, all the Ichimoku supports are going to fail, because during a correction, they're not going to hold in that bullish configuration. And the biggest telltale sign of when that happens is when the EMAs cross over. But I have a secondary strategy for that, which I'm not going to get into today because it's a little bit delayed, so you don't see them cross over until after you're well into the correction. So yes, you could have sold right here when the EMAs crossed over, but clearly that's not going to be viable because there's way too much money being lost if instead of selling at the top, you waited until you saw the EMAs cross like that. So we'll get into that at a later video. But yeah, so that's Ichimoku supports, horizontals, trendline supports. I kind of went off on a tangent before when I went into the Ichimoku stuff. So the last thing I'm going to say about this is the secondary uses of using these different support and resistances. When I have a trendline support like this that's going up, and you have a strong resistance, say like right over here, say I have other examples where this has worked. I just don't want to go digging through all my charts because that would just take too much time that we don't have. I really would like to show you guys another example, but yeah, it's going to swallow up too much time, so I'm not going to do it. Oh, you know what? Fuck it, I will. Here, because here's one. Here's an example. So right here, we have a strong horizontal resistance right here. See that? Where I have strong resistance? It ended up going, that's the candle body, and the wicks go up a little higher, so let's just say I moved it up a little bit more. It's fine. Doesn't matter. So we have that strong resistance up top, and then right here, we have a strong trend line support, right? So when you see a trend line support like this, that's going up, and you have a strong horizontal resistance up here, what's that forming? An ascending triangle. Ascending triangles are an extremely bullish configuration because you're essentially you're consolidating within the apex of that triangle, which gives you those potential for those explosive moves. Sometimes they don't go up and they go down. In this case, it did. But just so you can see how it works, we had the strong resistance, we had a strong trendline support, and just having those two support and resistances, the one trend and the one horizontal, is all you really needed to identify a high probability of a strong breakout move up or down. In the case of an ascending triangle, it's about an 80-85% chance that a big breakout move is going to go up. I would say, yeah, it's about 80, maybe 75. So it's 20 to 25% chance it goes down. In this case, it broke down, but I was right. It was a big move still, right? It wasn't a big move up, but it was a big explosive move just in the opposite direction. And that happens anytime you have an ascending triangle or a descending triangle. It's just inverted. You have the same probability of success of a breakout versus a breakdown, but it's the same principle. You have a strong support on the bottom, and then you have a trend line resistance that's forcing it down, so it's forming that descending triangle formation. And then the last thing is with my Ichima model, since I have these amazing supports that I use for part of my system, these dynamic supports do the same thing as the trend line. If I didn't even have this trend line here, if I didn't know that that was a trend line support, but I did have a strong resistance right here, I could say, all right, well, look at this. We have a strong uptrend. We have a strong resistance at the top that's not letting us go up any further. But our Ichima system, our Ichima model, is serving as a trend line support, right? So since the Ichima EMAs are moving up with the cloud in such a way that it's pushing everything up into this resistance up top, it's doing the exact same thing as a normal, typical ascending triangle where you have just the two lines. So the Ichima stuff as supports are extremely useful, and they can help you identify the biggest breakout setups. Okay, that is that for this stuff. What time is it? Let me see. 1 hour and 36 minutes in. 1 hour, 36 minutes in. Finish with support resistance discussion. Asking questions, but shy little pussies won't ask me anything. All right, come on, guys. Anybody got any questions? I know some of you guys have to. Come on, guys. Nobody has any questions in the voice channel? All right. I give up. All right. I need to get a bowl. See, if I didn't have a stop loss, I would have lost 20%. Just from having a stop loss, instead of losing 20%, I lost $40 instead of losing $500. You need to have a stop loss on every single trade. Always. Without fail. You are guaranteed to be more successful than you are now if you have a stop loss on every trade. I can guarantee you that. That if you go from not using stop losses to a stop loss on every trade, I will personally pay you back for any money you lose more than you lose now, because it's impossible. Like, it's 100% guaranteed you will make more money because you'll be losing less money. All right. So nobody has any questions. Everybody already knows everything, right? Everybody already has all the answers, all the TA skills. You're all world-renowned, skilled traders. Nobody has any questions.
My head, dude, I gotta come back and watch this.
Huh? Say again?
That clown stuff's way over my head. You went so fast, I gotta watch it again. So.
Yeah, there's a lot of content.
Places I posted in the private dark side chat. I'm having issues with my voice chat.
Oh, all right. Let me see something here. All right. So no, if you guys, I'm joking around when I'm saying you're shy little pussies. Obviously, if you don't want to talk on the thing, you don't have to. But if you're trying to and you can't because there's an issue or whatever, yeah, just use the YouTube chat or use our Discord. Let me just see here. It looks like. Let me go back to private dark side. Yeah. Quick questions for the chat. All right. Couple quick questions for the chat. Do you ever short? Not anymore. I do. I used to a lot. That's actually, I shorted with leverage for a while. That's how I was able to make back almost 6 figures in losses within just a couple months. But I don't do it anymore. It's a lot riskier. I might get back into a little bit here, but yeah, I don't trade margin instead. By using my past strategy, my personal asset short selling, essentially what that means is I can do the exact same thing as shorting. So if I have 5 Bitcoin and I'm really confident the price is going to go down, I can sell all 5 Bitcoin at 10 grand for $50,000. And when they go back to 9,000, I could buy all 10 back for 45 grand. Now I have the exact same amount of Bitcoin I already had before, except there's an extra $5,000 left over in my pocket to spend on other things. That's the exact same thing that happens when you're shorting. It's the exact same thing. The only difference is when you go to an exchange to short and you're trading on margin, you're borrowing 5 Bitcoin from them. So when you borrow 5 Bitcoin from an exchange, you have to pay them for the privilege to do it. But there's another problem. The other problem is you don't treat it like it's your money. And it's a very common issue where people who are trading with margin on margin accounts just they don't treat it like it's their money. It's weird. It's just weird effect where just the fact that like you're borrowing it, but it's not really your money, so you just don't think of it that way. Sort of like when you're paper trading, you take on a lot more risk when you're paper trading. It's just this weird psychological effect that ends up costing people all their money because you don't think of it the same way. Like when you're looking at your account and you can see on your account, I have 10 Bitcoin and I sell them and then I end up losing a bunch because the price goes up after I sell them and now I have to buy it back at a higher price. Um, you're taking a pretty big hit and you're scared of that happening, so you're gonna be a lot more careful. People tend to be more careless when they're trading on a margin account. That's number one. The other thing is by doing it my way, by using my strategy. If I'm in that situation and I sell 10 Bitcoin at $10,000 each for 100 grand, and I planned on buying them back at 9K for 90 grand, which would give me an extra $10,000 in my pocket. That was my plan. If I were to sell those Bitcoin at 10K and then the price just shoots up to 14 grand, I don't have to buy them back at 14 grand. If you're trading on a margin account, you have to buy those Bitcoin back at 14 grand and give those 10 Bitcoin back to the exchange that gave you a loan of 10 Bitcoin, right? But if you're using your own assets to do the exact same thing and you end up getting screwed over, instead of getting liquidated, you can just not buy it and instead get into some other investments using that capital. Right? So if you missed out because Bitcoin shot up 10, if Bitcoin shot up from 10 grand to 15 grand, instead of having to buy them back at being actually like forced to buy them back at 15 grand to give them back to the exchange, you could just walk away and say, shit, that sucks. I guess I'm going to get into other stuff. And now you could take all that capital and put it into Litecoin or something else that might give you a better chance of making some money instead of being forced to put it back into Bitcoin. Make sense? Everybody get that? Randy, you got that? Make sense? I'm in private. Yeah. Oh, somebody's got the audio feedback loop from YouTube coming through, so mute it.
Hey, real quick, I missed part of the chat. What were your targets for Bitcoin?
Well, we didn't really go over that. I wanted to just go. This was a Vader University educational stream. Hopefully, the best educational crypto stream you've ever seen for the newer people who haven't been here before. I really do like feedback, even if it's negative or positive. I want to know if I'm doing a great job. I need to know so I can keep doing it. And if I'm not doing a good job, I need to know so I can make changes. So you guys need to give me feedback. It's really important. But in all seriousness, it was a really good stream. I feel like we went over some good stuff, but it was more educational. We didn't really get into the charts. So we're gonna look at BTC now. I'm gonna do that really quick before we sign off.
Awesome, thanks, man.
Yeah. Any other questions though on the other side of things, educational and all the topics we discussed? Any more questions? Because I want to move on and just quickly look at Bitcoin for 10 minutes and then I'll call it quits because I got to go put the kids to bed. Actually, I hope she didn't put them to bed already. Jenny. I don't know where she went. All right, let's be fast. Any questions?
Nope.
I know nothing. Can I hear you? Speak. Say I like to have sex with big black men. Okay, doesn't sound like I can hear you. All right, now you're muted. I saw you muted yourself, right? You're trying to talk, but yeah, we're not hearing anything. You probably have. Are you on your phone or a computer? Because if you're on a computer, you might just not have the right microphone selected. You have to go into Discord settings, or while you're in the voice channel, you can go up top and right click on it and go to voice settings. And there should be an option in there: echo cancellation, noise suppression, input mode. So there should be an option if you're on the computer version where you can select the input device. Anybody else know how to do that? They can explain it because I'm not looking at the computer software yet. I'm looking at my phone. I don't know. I'm not sure what else it could be. All right. Well, I can help you figure that out another time then, or ask somebody in the group. Maybe somebody in the group knows how to fix the bug that you're getting. I know nothing, so I don't know. You could just post in crypto chat, maybe ask if anybody had any issues with their mic, if they can give you advice with Discord settings, whatever. All right. So nobody else had any other questions on all the educational topics we discussed. Anything I missed that you feel like I should have gone over? Because we can do it really quick if you want. All right. So yeah, last thing, just because we did. All right, I was gonna move over to look at BTC, but the last thing, I do like this topic a lot because I'm gonna do my recorded Vader University videos that I'm working on. I have one where I'm doing a PowerPoint and everything, where I show the order book and what sort of information you can glean from it. We talked about how you can see support and resistance on the order book itself, which is really cool. Once you understand how that works, it kind of opens up your eyes to all the possibilities. How much information you could actually garner from looking at things like the order book or the price action, things like that. Looking at the spread and the depth chart are very enlightening. You can see stuff that you know translates to something on the chart once you understand the correlation and the relationship between the two. So that being said, when you're looking at the order book and you see the current price for ABC coin is at $1, and you place an order to buy it at $1, and it does not fill, and then the price goes up to $1.10 and you missed out. That happens all the time because when you place an order for $1, what's happening is your order is just going to the bottom of the list. So there's already 200 orders above you where people are trying to buy that same coin for $1. If there are enough people selling it for $1 where they can fill all of your orders, then all your orders will fill. But if the order book shows 100 buy orders for ABC coin at $1, and the sell side of the order book only has 90 for sale at $1, then the person who's buying 100 coins is going to be able to buy 90 of them from the person who's selling it at $1, and then they're still going to have an order on the order book that shows 10 units because that's what they had left that didn't get filled at $1. And until somebody is willing to sell it at that price on the order book, their order doesn't get filled. Or if they're at the top of the list and they are the first order, and somebody does a market sell, then it's going to fill whatever orders it can from the top down. So, same orders, all based on time it was placed. What do you mean by that? It would be the time though, yeah. First come, first serve. Yeah, they fill in the order they were placed. So if you were to place an order right now to buy 100 coins, and there's 10 people who already placed their orders ahead of you, they're going to get first come, first serve crack. So if some guy posts a sell order for 100 tokens and you have a buy order for 100 tokens, you might not actually get your order filled because there was somebody ahead of you. And when you look at the order book, you can see your order book might show the $1 price, might show a total of 500 coins being bought at $1. That's the order that you see on the order book. And that 500 coin order, you might be the last 100. So before you placed your order to buy 100 coins at $1, there were already a few other guys that were trying to buy a total of 400 coins at $1. So now it shows up that the order book just shows 500 coins at $1 is the order that's on the buy side. But your order won't get filled unless the guys in front of you have their orders filled first. Bag of Orphans tagged me. You can talk about laddering in. Not really the time. The issue I have with laddering is personally, it depends. If you have the skill set that I have and that a lot of other people have, you might not like to ladder because you have an alternative. What I do, I'd rather buy at the bottom. Now, everybody says you never know exactly what the bottom's going to be, so let me explain. Now, say the price is coming down here on Bitcoin, right? And you want to ladder in, so you might buy right here around this support, and then you might place another buy order when you get down a little bit lower and place another buy order down here, and you're trying to accumulate as much BTC as you can. Now, what I would rather do, which does require more skill, you have to pay close attention, you need to be able to modify your plans and adjust orders very quickly if need be. But what I do is, I'm going to wait. I'm going to keep all of my capital out because I want to buy as much as I can at the lowest price I can get it at. So instead, what I would do, I would wait until we hit a strong support. That's part one. Part two is a rebound where I get confirmation. So if we're coming down like this and we hit a strong support right here, and then we bounce nice and hard right back up, I'm going to look for a potential support or resistance in the middle there. So looking at this right here, I can see that's actually a decent, well, that wouldn't have happened if we were back here. That's in the future. So let me go back. Hold on. Yeah, see this 0.5, right? At 10,918 right here. Support, resistance, some more support for these candles. So that's actually a pretty good minor support. If I follow that all the way over, I can see right here, more, the bodies of this candle were all supported right there. So this 50% fib right here at 10,918, if I extend that line over, it actually is a good minor support. I wouldn't consider that a major support, like we were talking about before. This is just a nice minor support. Even this candle here was pretty close. And you can see other instances where you had support right there. So let's say we're coming down, and we bounce right off of this strong support, and then we move back up, and we get above that support. Well, now that we're above that support, and we're also above this trend line, right? Because remember, I had a strong trend line here that I extended down. So now we have the trend line as support. We have this horizontal line as support, and there's confluence, right? We have multiple types of indicators giving us confluence where they're matching up, and essentially they're in agreement on the same argument. So right here, the 50% fib retracement matches up with everything else we're seeing. So that's a really good minor support range. So after we get the first bounce and we get back above these supports, that's where I say, okay, that's confirmation of a bounce. So I would buy once we have confirmation and we get just above all those supports. So by buying there, I have a better probability of getting in at the bottom because now it looks like this is a potential good bottom. But instead of buying every time that happens, what I do is I buy right here, and then if we end up coming back down, I'll just get stopped out. So if I enter right here and then I set my stop loss, the second we move up, I set my stop loss right at my entry price. Now it's a risk-free trade. I can't possibly take a loss, right? If we do move all the way up and that ended up being the total overall bottom, I just got in right at the bottom, which is incredible, right? But if the price does come back down because that wasn't actually the bottom, I'm going to get stopped out and break even. I'm not going to take a loss because I moved my stop loss up to my entry price. So now I get out as if I never got in with all of my capital still in my pocket. I didn't lose a penny, and now I go for it the next time. So the next time it happens and we get a nice strong support bounce, I'm going to wait for confirmation and say, all right, well, now we got back above this minor support that was right there. So that's confirmation. Now I'm going to place my buy order. And if we run all the way up, great. If we keep running all the way up, I bought in right at the bottom. But instead, as soon as we move up a little bit, I move my stop loss up to my entry price. And now again, it's a risk-free trade. So if we keep running up, I got in exactly at the bottom, and I'm the fucking man. But if my call wasn't that perfect, and it does come back down and it stops me out, that's now attempt number 2. Both times I got out with all the money I put in, I didn't take a loss, and now I can make the next attempt at the bottom trade. Right here, it looks like we might have hit the bottom. We got some support, we bounced up. As soon as we get back up to this roughly 97.70, I move my stop loss up to my entry price, so I'm risk free, and I'm doing it over and over again. So instead of laddering in and accumulating more coins, instead, every time that you might be laddering, what I'm doing instead is making a play for the bottom. And if we do get that bounce and it looks like it's the full on actual bottom, I just got a better entry than anybody else in the game, because instead of laddering in at higher prices, I used all my capital to buy at the lowest possible price. But again, in order to do that, you need to know how to manage these trades. You have to identify not only the supports, you have to be able to identify what is considered a confirmation zone. Because when you want to buy back in, you don't want to buy back in until you get that confirmation where it looks like you're getting back into an upward trend. So I'm able to essentially repeatedly try to buy the exact bottom. So when I say to people, I don't like laddering in, I'd rather just buy right at the bottom. People laugh at me and they're like, well, obviously, but nobody can just know exactly where the bottom is. Nobody buys right at the bottom. Since that's not an option, laddering in is the only viable solution. I contend that that's not the only viable solution. I have an alternative that requires a little bit more skill, because you got to stay on top of your shit. You got to be able to set alerts well. You need to know when is the right time to get in, and you need to know when the right time to move your stop loss is. But if you're able to do that, if you have that skill set, that's a far superior strategy to just laddering in. Any questions? Did you guys see? So, if you guys are watching the news, Steve Mnuchin, he got a question, and the question was something about, like, as a Jew, how do you feel about white supremacists supporting, your administration? And he flipped out at the reporter. Do you guys see that at all? So in all of those press conferences, even with the president, my cousin is in the White House press corps, Andrew Feinberg. So if you guys ever notice Andrew Feinberg asking the president questions, or Steve Mnuchin, that's my cousin. I was talking to him, trying to get more inside info. I told him how I have a lot of connections, and I was able to find out beforehand that something big was going to be happening. And these hedge fund guys know the president and his people, so they actually knew beforehand that the president was going to start talking about crypto, and they were all liquidating their shit. And I knew about it beforehand. I got a free tip that that was going to be happening or whatever. So I was trying to see if he would say, like, oh, I also have sources that told me this or that. I was hoping he would give me some intel too, but he doesn't have anything for me. Anyway, it's just kind of cool. He was sitting there asking Steve Mnuchin questions. I told him, I said, hey, this is what you need to ask him. What you need to ask him is, when you come out criticizing cryptocurrencies, and you say cryptocurrencies are used to fund terrorism and crimes and human sex trafficking and drugs, I have a very simple question. That probably accounts for 0.0000001% of that illegal activity, when more like 90% of that illegal activity is funded by the US dollar. How do you feel about that? And do you plan on regulating the US dollar in the same way you plan on regulating cryptocurrencies? I want to see exactly how he would answer that. And then he told me that, oh, well, they would, would do whatever. And I said, no, they can't do that. So I also told him the next thing you need to ask him is, Mr. Secretary, how does the United States government plan on regulating the usage of cryptocurrencies? And are you aware of what the definition of decentralized technology means? And I'm very curious to know if these government officials even understand what these concepts mean, because I'd be willing to bet they don't. And if I was my cousin, Andrew, I would say exactly what I just said. And then regardless of what he says, I would ask, how? When he says we would do X, Y, and Z, how? The American people would like to know how you plan on regulating the usage of cryptocurrencies that are decentralized and not accessible by any central entity, and not regulatable by any central entity, any centralized entity. So hopefully he listens to me and he asks some of those questions, because if he does and we get a classic stupid answer where he has no idea what he's talking about, that would be really good for our community. That's for sure. So yeah, everybody understand what I was talking about? Where laddering in and the difference between laddering in and my strategy. I don't know if I mentioned it for people who don't know, but laddering in, just think of like a ladder. You have a bar here, a bar here, a bar here, a bar here. Every 5% is another horizontal step on a step stool, a step ladder, right? So that's all it is. You're just buying as the price goes down, so you're dollar cost averaging down essentially. It's pretty much the same thing, where instead of buying Bitcoin at $10,000, if you buy a Bitcoin at 10,000, and then you buy a Bitcoin at 9,900, and then you buy a Bitcoin at 9,800, well, now your average price that you entered at is 9,900. So instead of making X dollars when you calculate your profit, you're making more, because by buying in more at a lower price, you're lowering your entry prices essentially. So, all right, nobody has any questions on that stuff, right?
How do you time the bottom so well?
Huh?
How do you time the bottom so well?
I'm really good at identifying good supports, and I'm really good at knowing when to enter, so I can manage risk appropriately. So when I get into these trades and I get in at a good support, it's because I'm identifying those supports. And that's why I said in the beginning of this whole thing, support and resistances are the most important thing to learn when you're learning TA, because they relate to everything. Everything else is dependent on them. Most other indicators are themselves just another type of support and resistance. That's the end all be all. Once you have that skill set, you can get these surgical entries. You know how I always say that in tweets and stuff? I'm like, look at that surgical precision. Sometimes I'll get into a trade like 2 pennies from the bottom, because I'm really good at spotting those supports. And the more you do it, the better you get, because it becomes second nature. It gets to a point where I can just look at a chart with the naked eye and say, that's the 618 extension right there. I could just point to it, and then we do a fib extension, and sure enough, I'm like right there within 0.1%. It's pretty nuts. But that's essentially where that skill comes from. Those perfect surgical entries are based purely on my abilities to identify good support and resistance. All right, the last question.
Yeah. What are your thoughts on Bitcoin right now?
All right, we're gonna do that right. Last question, and then we're doing that. The last question on Discord said, that was from Randy. On Binance, maybe I don't understand. I'll try to buy BTT at 10 sats. I'll place the order while it's at 10 sats. The order won't fill, even when it drops to 9 sometimes. Same orders, all based on time it was placed. Yeah, that wouldn't make sense. Do the orders fill in the order that they were placed? Yeah, we already talked about that, but that doesn't make sense. If you place a buy order to buy BTT at 10 sats and the price goes down to 9 sats, your order would fill if that stayed down there. But if there's other people in front of you, theirs would fill first. So maybe that's why. Maybe that's why. Maybe the price went down to. No, that wouldn't even make sense. The price couldn't go down to 9 cents until all of the 10-cent orders were filled. Like the current price listed would have to stay at 10 cents. The price listed shows the price of the last sale. So if it shows the current price of BTT at 9 cents, 9 sats, that means the last sale was a 9 sat sale. And if you have an order on the order book to buy at 10 sats, that's not possible. So you might have maybe you didn't see it correctly, or it might have been a bug on Binance, but that really shouldn't be possible. So I would have to see that live to see what the hell's going on. Yeah, I do. Dude, so many alarms. Look at this. I clear this out like every week, but these are just all of my active alarms on TradingView. Like, and I trade these, or I change them and erase them constantly. I clear them out and start over, and still I have dozens of them. At one point, I had like 300 alerts set up. It was insane. You can see just in the last couple of days, the last couple of weeks rather, from, let's see how many alerts I've gotten. The ones that I haven't even cleared yet, just in July, is probably like 40. But yeah, I do pretty much all that on when I'm sitting here in front of my computer. I just watch it. But if I'm not here and I'm on the move or if I'm doing other stuff, I use alerts on TradingView, which is easy. Like if I set a buy order to buy right here when the price gets back up there. Say I haven't bought. Say right now I just set like this, that I want to set. This is my confirmation. So I'm only going to buy when the price gets back. I'll do this. I'll set my order on Binance and then I'll just do alert right here. Set my alert, and as soon as I get that alert, I know that my order filled on Binance. So I don't have to go check Binance or anything. But once I get that alert, I don't have to keep checking Binance. As soon as I get the alert, I go on, set my stop loss, and I'm good. All right, so that's it. Let's go and take a look at the chart really quick. Yeah, you'll see the major and minor support and resistance stuff, and then candles with wicks. Covered all that in a lot of detail. I'm sure everybody who's been here will agree that we pretty much kicked ass on that topic. Um, Kirk, Echo. So yeah, when you watch this back, you'll be able to see all that stuff, and then let me know if you have additional questions, and we can do those on the next stream tomorrow. All right, so really quick, I do have to go, so let's just look at Bitcoin for a quick checkup. We've already gone over it, so I'm looking at the main support is going to be right here, the 50% retracement. So this is a 50% retracement at exactly $8,500, and that's going to be the ideal target for that next leg.
You might have done this earlier, but do you mind really quickly showing where you down from and how you do that? Sorry about the feedback. I'm having issues.
I missed it. How do I do what?
Show us really quickly how you use the Fibonacci tool and where you pull it down from.
Okay, yeah, we could do that. We'll just have to be fast, but hold on. Oh shit, this has been 2 hours. Fuck me. 2 hours and 7 minutes. Alright, let me just make a note of this. 2:07 finished answering questions about XYZ. I remember what that was. On to final BTC chart check and fib mention. Okay, I wanted to do all the educational stuff and then questions and then do a quick review of the chart. So I don't want to go over anything else, but I will. It's just kind of throwing the thing out of whack. So we'll save this for the next live stream, like tomorrow. But just to do a really quick one, just to show you really fast. So there's two things that I use with Fibonacci. I have a ton. So for people who aren't aware, people who are newer to the group, a couple things. Everybody has to go to new members first stop, which is right here. Whoever's got all that background noise with crumbling stuff, you gotta mute your mic. I can't even hear myself think. Thanks. Okay, or not. Whoever's Supreme, is that you?
What's up?
Can you mute your mic? It sounds like you're putting wrapping paper into a ball or something.
Oh, sorry about that, man.
Yeah, it's all right. All right, so new members first stop is very important for all new members. There's a live stream I did where I went through a welcome stuff for the channel, and I went through all the different channels, where everything goes, how to access stuff. And then for the next live stream was one of our Vader University streams where we went over BTC, but more importantly, we went over the most entry-level ideas. I covered everything, like which websites, like the most basics of basics, that you need to have an account on these websites and you need to know how to use CoinMarketCap to go figure out stuff about different, that sort of shit. So it's very important you watch those too. But also, for people who want to watch more educational content, down here I have a new layout for Vader University that I haven't really used all that much yet. Under the basics, in Intro to Crypto and Trading, I have a bunch of stuff, but I haven't gotten much further than that. I haven't moved on to these other sections yet. I'm going to start filling it all in over time. But for now, streams like the one you're watching now are going to be available. They're just not as precise as like these 10 or 15-minute videos I'm doing for this section. If you look at video links right here under Premium Group and you go all the way up to the top, you'll see right here a couple of posts that have like a whole list like this, has like 15 different YouTube links. These are some of the best streams that I've ever done, and they're all really great educational Vader University streams. So here I talk about Ichima with the EMAs. Here I talk about Elliott Wave and how to use Fibonacci. Here I talk about Fibonacci and Elliott Wave again, along with Ichima. And then I talk about more Fib and Elliott Wave stuff. And then I have a couple like this one, which is just discussing Fibonacci, how I use it, how you can use algos and bot trading to predict price action. I went over Ichimoku in this one. So you can use these links to brush up on all of our educational stuff. And then after you look at these and you watch these streams, let me know what else you're not clear on. So if you watch all of these and then you're still not sure about how to use something, you can let me know, and then we can do another stream dedicated to that topic just to help you out specifically on whatever it is you need help with. So definitely go back and look at these older streams before you ask me to do a new stream on Fibonacci. Just go back and watch the video here on Fibonacci. There's several of them. So that being said, we will go over it in more detail at a later date. But just for the time being, just to give you a really quick overview, the short version. So there's a few different ways that you can use Fibonacci. Now, Jesus Christ. It's like chart vamps. Look at all those. See, I told you. These old support and resistance, if we ever get back down to those prices, might be very important. And given how close they are, you could actually tell I was doing some flash trading here where I was using like the 1 or 3 minute chart, and I was getting in and out on every one of these little waves. I made so much money on Link back in May when we were doing that. Like, it was insane. I was making like 70% a day. It was fucking nuts. So, now that being said, here's one example of using Fibonacci where we do, if we want to know after this corrective wave, or better yet, sorry, let me do, that's not even a good one to do it on. I might have to grab a different chart. You know what, no, this will work. Okay, so I might say like, all right, now we're doing a correction here, and I want to know what the potential correction targets are. So we had this nice solid move from the bottom right here all the way up to here, and then we got rejected, and then we had the correction, right? So this was, say, we had like a 1, 2, 3, 4, 5 impulse, and then we have a 1, 2, 3 ABC, right? A, B, C, corrective wave. But I want to know after this move up, we start coming down, and I want to get an idea of where we might finish this correction. So what I do is I use Fibonacci tool right here. Just the right, there's fib retracement, and then there's fib extension. We're using Fibonacci retracement. So we're going to start at the bottom, all the way at the bottom of this move, all the way to the top of this move. Now, instead of just clicking the mouse here, I line it up with the top so I can see this gray line all the way up there near the top of that red wick, right where the green line is. So what I do is I line it up like this, and then I move it over because we want to see these lines go all the way out, right? So I move it over like this, but I make sure that the gray line that represents the top of this retrace has to line up with the top of this red candle, which also happens to line up with this green line, right? So now by doing that, now I have different fib levels, so I can look at what potential targets are. So now on the way down, there's the 382 is a potential target to get support, and sure enough, we got it, right? We got a lot of support right around there. Then we went back up, got rejected by the 236, came down pretty hard, and got super support from the 618. Now, normally, I would have said this is an ABC, and it finished at the 618, because it's a really perfect retrace. That is an ideal retracement. So we would have A, B, C, and then we got such a great bounce off of the 618 that really would have been perfect for that to be, you know, the next impulse up. So this was wave 1, this correction was wave 2 to the 618, and then we would have gone into wave 3. In this particular case, that 618 didn't hold. It did go down again, and it never made it all the way to the 786. But you can see these other fib levels were pretty good for support and resistance. You can actually see right here, look, rejected at that 236, really strong support from like 6 candles in a row, right at the 0.5, right? And then we had the 382, and then we had the 236 as resistance right over here, again with all those wicks. And then the 618 was a super strong support, failed here, came back, and again, support there. Then we had, no, the rest is history. But anyway, that's what the fib retracement tool does. So if I want to see where those fib levels are, I start at the bottom of this move all the way to the top of this move. Now, if I want to do the same thing the other way around, and I want to see what the retracement levels are, the fib retracement is after this correction, I would do the same thing. I would start at the top of the correction, and then go all the way to the bottom of the correction right here. Move my mouse out a little bit so I can see the lines go out further. Now by doing that, top to bottom, now I know each time we go up here, I mean delete this other fib retracement from the first part. So this is all from the second part now that we just did. So now after this correction, we could see rebounds that go up to these fib levels, and sure enough it does. Check this out, look, boom, that first main wave back up right to the 382. It came back down, support right at the 236, then went up, look, got rejected right at the 618. Isn't that amazing how strong these Fibonacci levels are? Is that not incredible? That after this drop, if we drew this fib level right here, this fib retracement, I could have actually gotten into this trade off of the bounce and known that the strongest resistance that we were going to hit would have been at the 382. Then we had support here, and then we had another resistance up here at the 618 that rejected us. But if you had all that information before you even had any of that section, right, all you knew was we went down here and now we started going up. If you were to just buy right here, right, say that's what it looks like currently. It's at right here at 38.71. That's the current price, and we don't know what's going to happen in the future. All we know is we had an impulse up, a correction down, and now after correcting down, we do a fib retrace, and we can see that there's all these different fib levels that we can use as targets. If I were to buy right here, as soon as we were to cross over the 236 right there, I would know that I have a good support that I can use to protect my stop loss. So now my stop loss can get moved up quite a bit because I have a good support here at the 236. Sure enough, it holds. We push up, we cross the 382, and now we're above another good support. So now I can move my stop loss up even further and lock in more profit by placing it up here just below that next support at the 382, right? So now the 382 becomes the next strong support. My stop loss goes right under it, and we continue moving up until we finally get rejected at the 618. After we get rejected at the 618, we get stopped out because our stop loss at this point is right at that 50% retrace. Because after we cross that next strong support, right, after we get back over that 50% retracement, we can move up our stop loss even further. So at this point, I would have probably moved it up right to where the 382 is. Then we got rejected at the 222. I don't think I would have had another chance to move it up further at this point, so I probably would have just gotten stopped out. But you get the point. And then for the fib retracement tool is extremely important. It's one of my favorite tools because it does a really, really good job of helping to model prospective targets for like something like a wave 3 move. Wave 3 is usually the most impulsive wave on an impulse of all the motive waves. So looking at this, we have this initial impulse is probably like so like that could be the initial wave, right? That's the first impulse. 1, 2, 3, 4, 5. And then we have a correction, wave 2, which puts us in wave 3. So the way this works is that subwave of 1, 2, 3, 4, 5 is all wave 1, right? So that's wave 1. This was wave 2. Now we are in wave 3. Then there's wave 4 and wave 5. what we really care about here is wave 3. So in order to use the Fibonacci tool to give us the best probability of catching the correct wave 3 target, let me show you. So what you would do is the Fibonacci extension tool. What I do is I take the bottom to the top just like we normally would, right? Normally when I do this, it drops it so that the 0 right here at the bottom goes down here at the beginning, and the 1, right, that goes up here, see where it says 1622, I'm pointing it with my hand as if that makes any sense. Here. So the way you do it, right, I click the bottom to the top, and then it creates this. Normally, if I did that, it would have placed, when I clicked the top, this 1 would have been right where I clicked, and the 0 would have been right where I clicked to start it. But with the extension tool, instead what happens is you click the bottom, then you click right on the top, then it gives you this Fibonacci extension, which you then manipulate and place somewhere else. So instead of having it like this, which is just a regular fib retracement, right, where it starts here and ends here, instead of doing that, it gives you this fib, and then you drop it at the right spot. So in this case, we would drop it at the bottom of wave 2, because what we're looking to find out is these fib ratio levels, we want to know where they fall after a point. So if this distance right here, and we calculate, that's the key distance for wave 1, since wave 3 is often a 1.618 extension of wave 1, we could do this, bottom to top of wave 1, drop it, right, so after we click the top, that this is moving around, we drop it so that the bottom part, the bottom line here where my mouse is, lines up with the bottom of 2. Now, the 1.618 extension is right here. So now we know 2140 is our wave 3 target. And a lot of the time, you guys have been blown away by some of my calls where I get to call, like, I'll look at something and say, wave 3 is probably going to go to $216, and then it goes to like $214.80 right at the 1.618 extension. People are blown away, like, how the hell did you do that, Jesse? That was amazing. Teach me how to do that. That's incredible. Well, use the Fibonacci extension and look for a 1.618. That's it. You're looking for 161.8% of the first wave. Now, it's important to know that that doesn't necessarily mean it always happens, but you have to understand why. I've talked about this a lot in the past. Bots and algos, right? If you're trading with an algorithm, when these guys are developing algorithms that automatically trade, what they're doing is they are trying to buy and sell when most other people are going to be purchasing that coin. So when I'm developing an algorithm, say I'm working for some hedge fund and I'm writing software so that they can automate their trading, what I'm going to do is I'm going to say, all right, well, everybody in crypto always buys based on these fib levels. It's very, very common in cryptocurrency markets. It's also common in traditional asset markets. The stock market also works the exact same way. A lot of trading occurs on these fib levels. Except with crypto, it's even more pronounced because there's so many bots and automated systems doing this stuff. So once 3, 4, 5 hedge funds out there start using custom software that's set to predict a 1.618 extension for wave 3, now that means that everybody is going to be, all these people are going to be selling these huge amounts of ethos, of BQX, when it gets to the 1.618 extension, because that's the wave 3 target. So since all these computers are programmed to sell when it gets to that wave 3 target, that means the price is going to start dropping because everybody's selling, right? So since everybody's selling and the price starts dropping, then all the regular people who aren't computers are going to see the price dropping. So then they're going to sell, and they're going to say, oh, look, the 1.618 extension must have been the wave 3 top because now it's dropping. They're all going to sell. So as a result, you get this big drop or a big dump after you hit that 1.618 extension. But it's a self-fulfilling prophecy because since we know everybody's going to dump at the 1.618 extension, we program our computers to dump at the 1.618 extension. By doing that, when we get to the 1.618 extension, we're going to start dumping, which is going to force the price down, which is going to cause everybody else to see it and say, hey, let's sell. And then the price is going to go down even further. So it's a self-fulfilling prophecy. The only reason we have a 1.618 extension target is because we already thought that we had a 1618 extension target. So we're just recreating a circle of the exact same event occurring. So that's how you use fib extension tool. So you have fib retracement, fib extension. They're used for different things, but that's the gist of it. Any questions? Yo, there is absolutely zero chance that you guys don't have questions. Come on, give it to me. Has anybody else been in a different crypto group? You can, if you don't want to talk on the voice channel, I'm going to disconnect from the voice channel because no one's talking anyway. So we can just use private dark side chat on Discord. I'm just curious, have any of you guys been in a crypto group that claim to like be educational in nature? And I'm curious if any other group out there, group leader, is even remotely close to how I teach and how much we go over this stuff. How do you do what with low sat coins? What do you mean? Yeah, right. Well, I like to get feedback. So negative feedback's important to me. I really like constructive criticism. Even one of our members before this stream had some constructive criticism for me, and I was like, great, that's amazing, thank you. Because as a result, I came up with this format, and we just covered really good topics in amazing detail. I at least personally think I did a really good job explaining it. And because of our conversation a couple hours ago, I had a plan in place where I was going to mark down the timestamps. So when I reload and repost this video, the live stream for other people, I'm going to list out the timestamps so people know where the different subjects are, so you don't have to watch a 2-3 hour long live stream. So that constructive criticism was key to making this stream as good as it was. So you can imagine how much better things can get if everybody gave me, constructive criticism. The fibs with low sat, it's tough with things. No, it's not. Well, things that are low sat, you can't do anything. It's not just fibs. You can't do any TA with it. It's impossible. There's really nothing you can do when a single pip, when it goes from 17 sats to 16 sats, you're talking about like an 8% change in price. You can't even chart that. It's impossible. The only way to do it is probably to go out to like a much higher time frame. I'm only the best educationally, Randy? What kind of shit is that? I'm the best at everything, motherfucker. That's funny. Saying you get stopped out of a call and he gets mad. I love being wrong because every time I'm wrong, I learn something that I can do better, right? Like if I make a mistake and I'm wrong about a trade, if I think a trade's going to go up and it goes down, I'm actually happy that it happened because I use really good tools and I have a really developed, highly developed skill set where I'm really good at mitigating my risk. So I don't take a loss on trades when I'm wrong. I do, I take little losses, but I don't really get huge losses and get wrecked, right? When I do take losses on trades, it's usually a very small amount. I'm losing 0.5%, 1.5%. Sometimes I'll lose 3 or 4% on a trade, but that's very rare. So I don't mind losing because I'm not losing a lot of money. But when I do lose on a trade and I make a mistake, it's extremely valuable because I can learn from that experience. And in the future, I become a much better trader from just that one error. Making that one mistake and trusting the bullish divergence, even though there was something else that was showing me something negative, or making that one mistake and drawing a trendline support when I really shouldn't have drawn it because it technically was invalidated. I thought that it still worked, but it didn't. Things like that. Something like that can go wrong, and I can get extremely valuable intel. So in the future, I don't make those errors anymore. So that's why I don't mind being wrong, and I don't mind when other people give me shit for being wrong because it's a good thing. But anyway, yeah, I definitely have the cutest kids for sure. We're gonna do some videos on stop losses specifically. practicing using paper trading is key. It's really great to practice using paper trading because you're not losing any money at all. It's fake money, right? So if you set up a paper trading account on TradingView, you can practice using stop losses. And one of the key things to do, the biggest issues when it comes to stop losses, and we'll get into this in detail in the next video or two where we talk about it, you have to identify the ideal timing to adjust those stop losses. You also have to identify the levels to which they should be adjusted. So it's not as simple as just one little thing. A lot of the time, people complain that they keep getting stopped out because they move up their stop loss to get to risk-free status immediately. So number one, you shouldn't complain because you're getting out of the trade without taking a loss. If you were taking a loss, I would understand if you were getting frustrated. But if you're getting into trades and you're moving up your stop loss like as soon as you possibly can, you're doing it because you don't want to take any losses. If you're willing to take a couple losses here and there, you can keep your stop loss lower. Then you have a chance of getting in that big move up. There's also a possibility you can get stopped out for a small loss. So it's all about balancing the pros and cons of every decision. But once you start doing it more and more and practice more and more, it becomes second nature. And now I can be in 10 trades simultaneously and manage all of my alerts and then move around stop losses and stuff like that within a matter of a couple minutes. Because I do it so often, I've developed it so much, that skill set so much, that now it's like second nature to me. And that'll happen to you guys too. All right, we are all set. Anything else? Any other questions? So with BTC, I'm waiting for it to come back down probably to 8,500. I'm in a position right now, but I don't know if it's going to hold or if I'm going to get stopped out. I would like to get to risk-free pretty quickly on this trade. I was kind of hoping that right after I bought in, I would get like a 3 to 5% move up. That's all I really wanted, just to get back up to close to 10K, and I would have sold for a quick profit. That's why I said in short-term trades, I'm not doing any trading right now. I'm watching the market, staying out of things. I'm going to start paying attention more and more, and if I do see a good altcoin trade, I might get in. It goes without saying that I am not even considering trading against BTC. You should only have trades with stop losses set to stop you into USDT. If you have a stop loss that's set to stop you into BTC, you might get into some serious trouble. There's a couple downsides to using stop losses that stop you into BTC, one of which, and I'm going to do a quick Twitter rant about this. A lot of people say like, oh, well, it's better because then if you do this and if BTC goes up, you don't miss out. You want to get stopped into BTC. They don't know what they're talking about. That's so not true. But the important thing to know and remember is not only if you get stopped out into Bitcoin and Bitcoin goes down 20%, you're taking a huge loss. But think about it another way. What happens if you have a coin that's paired with Bitcoin and you have your stop loss set to stop you out if it goes down to a certain price, right? But imagine instead what happens is Bitcoin goes down 30% and your XLM also goes down 30% against USD. If XLM and BTC are both down 30% against Tether, your trade doesn't get stopped out because your trade is going to show XLM is equal to where it was against BTC, right? If XLM shows up as 10 cents when you're trading it against BTC, not 10 cents, say it's here. Well, let me just give you an example right here, right? BQX is 1,500 sats, right? If BQX versus the US dollar goes down 20%, and Bitcoin also goes down 20% versus the US dollar, then your BQX position is still going to show up as 1,500 sats. So you're not going to get stopped out, but you just lost 20% of your money and you're still in the trade. That's crazy. So when you're trading against BTC and you have a stop loss based on this pairing against BTC, you lose control because you're trying to force two variables together. You have the price of USD, you have the price of Bitcoin, and you have the price of BQX. So now you have three variables that are determining the outcome of your trade. It's crazy that people think that there's a benefit to trading against BTC with your alts. People always say, well, what if you want to increase your sats and how many BTC you have? Then you should just trade against USDT, make money, and then use that profit to buy more Bitcoin. It's the exact same thing. But people somehow get it into their heads that that trading against BTC is somehow better or more profitable or gives you better odds of making more Bitcoin than trading against USDT. It makes no sense. It's crazy. I don't really have any concern with Tether. Not really. Like I wouldn't hold it long term. I wouldn't put 100 grand into Tether and leave it there for 6 months. But if I'm getting in and out of trades over a day or two, I don't mind being in Tether for a day or for a few hours or even a few days. I'm fine with that. I can sit in Tether for 3, 4, 5 days. I wouldn't be too worried about it. If it was a month, all right, maybe you're testing your luck because it's possible something can happen. I think it's very unlikely anything happens, but if they do eventually get shut down, it's whatever. It is what it is. In the meantime, I stay in other stablecoins. I don't hold Tether for a long period. I get in and out of Tether trades, but as soon as I get out of those trades, if I'm not going to be getting into something else in that same 24-hour period, I'll probably move it over into PAX or USDC. All right, we're done. For BTC, I'm still waiting. I'm not getting in to any other trades. I have a pretty big position that I got in right here. If we can get back up 3 or 4 or 5% up to like 97.50, 9800, I'll move my stop loss up to risk free. If we can get up to like 3, 4, or 5% for my entry at profit, like close to 10K, I'll probably sell and take that profit if we can get close to 10,000. I don't know if we're going to get back up above 10,000. So that's the deal. And then we'll play it by ear, and I will share my thoughts as soon as we start seeing some movement in one direction or the other. For right now, it's a good idea to do this. I have an alert. I'm going to set an alert right here, right, at 9,900. I suggest everybody do this too. So now I have an alert at 9,900. Let's make it 9,900. And I want it to say, when it pops up on my phone and my email and everything, I want to say BTC at 9,900. And now I'm going to do another alert right here, which is to 9,100. So move it up a little bit more. Hold on. I'm going to make it like 9,150. There we go. 9,150. BTC at 9,150. Bitcoin at 9,150. So now I have two alerts. I don't have to sit here staring at it. As soon as I get a notification, I can immediately react. Okay, that's it. Any final questions? Does anybody want to vote how good today's stream was? Was it a really good one? Hopefully. If you guys have any constructive criticism, let me know. Again, for the 10th time.
Thanks for letting us interact.
Absolutely. I really love when you guys participate on the voice channel, and I really love when you guys give me any sort of feedback, negative, positive, doesn't matter. The more you can tell me, the better I can make this group, and I want to improve every day and make it, as good as it can be. I want it to be the best group out there, if it's not already. So, all right. Thanks for stopping by. I will, this is going to be uploaded once it's finished processing. Then I'm going to do a second version of it where I'm going to take this one down, put up a new version where I edit out the first 7 minutes where we're not talking, and I'll share a timestamp list of the various topics we went over. If you have any other questions.
One quick thing, Vader, before we go.
Yeah.
So when you have like a really, really hot trade, you mind like spamming it a couple times? Just to, for like the urgency?
Well, have you set your alerts up and everything?
Yeah, I get notifications for everything. Yeah, and it's like, I guess just to kind of like elaborate, like this one's a hot one because I don't enter in every single trade. I usually like the safer ones just to be again on the safer side.
Yeah, so don't worry about what you can do is if you get notifications every time I post in short-term plays, then you'll be aware, and then you could just look at it each time, because I don't really know. I wouldn't be able to say this is a hot trade that everybody should get into, because like we talked about earlier, if you rewatch the stream, if you weren't here in the beginning, I don't like, everybody's different. So what might be a great trade for me might be a horrible trade for you based on various, there's a bunch of different variables that can affect that. So exactly. So It might be like I might say this is a really great trade to get into Monero right here, but you might already have like 10 different privacy coins and you don't want to get into another one. So you really can't make generalized statements like that. But as long as you have notifications, so any post to short term trades you get notified, that's fine. Now the other thing you could do is, oh no, you can't do that. I was gonna say I might be able to get a bot. There might be a bot I can set up where you can add like a special type of notifications where like it'll send you a text or something based on certain variables that you assign to it, like if I don't know, I don't really know how to make that work. If the post contains low risk or something. If a post contains low risk, then send that post to my text. Maybe there's a bot or something that can do that, but yeah, there's not really a good way to do that. It's like somebody else said, every time you post a good trade, can you do at everyone or at Jedi? And it's like, no, you already get if you're because the problem is if you have your Discord set up to notify you whenever I post to short term plays, you're already getting a notification, but you have the option of turning that off. If you have it set, if I do an at Jedi on everything, then it's going to notify people no matter what. It might just annoy the shit out of people. So.
Or maybe this might work. When you post a trade, you could maybe write like medium risk, high risk, low risk. Like I know you kind of already do that, but if you can maybe add something like a quick thing on each trade just to like gauge it faster. Because I'm like stupid busy at work every day, and I'm just it's like when I'm looking at it, if I can see sticks out, I guess if that's possible.
Yeah. All right. I'll see. Maybe there's something we can do. I'll use my little brain and see if I can come up with some creative solutions. All right. Sweet. No other questions, right? We're all good.
But I appreciate it, man.
Absolutely. All right. I'll be around. I'm still around for a while, so I'm still here. If you guys need me, I'll be in Discord and shit all night. I'm gonna go check Twitter and see if I have to bitch slap any trolls, and I'll catch you guys later.
Cool, man. Thank you.
All right. Later.